banks report, the revenue numbers are certainly under pressure due to the spreads, the so-called net interest margin. What you're seeing in the consumer space is that many of the consumers have slowed down their spending, as you might imagine. They've also boosted their deposits and savings accounts with the banks, and they're just not, spending as much on the credit card. So the revenue from the traditional consumer has clearly slowed down due to the pandemic. But it's interesting, due to the government programs that are in place, such as the unemployment insurance benefits, now many consumers get an extra $600 a week if you're unemployed. What you're seeing here is that the consumer has not been defaulting on loans that you might imagine they would, and that it will change. But the consumer and its impact on the banks so far has actually not been as bad as expected.
Now, in terms of Morgan Stanley, obviously it's got a lot more exposure to the equity markets. Is there a potentiality that it could really outperform compared to some of the other banks we've heard from this week?
Nathan, I think there's yes is the short answer. They'll be more like Goldman Sachs because exactly what you said. They didn't have the big Goldman's provisioning wasn't as large as it was at J.P. Morgan or Citigroup that are more diversified, the universal bank model. So Morgan Stanley has even less credit exposure than Goldman Sachs. And so I think you're right. I think you're going to see less of a drag on credit losses or credit provisioning at Morgan Stanley than you saw at Goldman yesterday, suggesting their numbers could be even stronger because Morgan Stanley should have numbers as good as Goldman Sachs in many of the traditional investment banking and trading areas due to their presence in the markets as being one of the real quality big players in capital markets.
All right, we're going to get those results, as we say, later on this hour from both Bank of America and Morgan Stanley toward the bottom of the hour here. Gerard Cassidy, Managing Director of Equity Research at RBC Capital Markets. Thanks for being with us this morning ahead of those results from B of A and Morgan Stanley. S&P futures right now are down, lower by 22 points. Dow futures down 170 points. NASDAQ futures leading losses for the futures markets this morning. They're lower by 144 points. 10-year Treasury up 3/30 seconds. The yield 0.61%. 2-year Treasury yield right now is at 0.15%. You're listening to Bloomberg Daybreak.
This is a Bloomberg Money Minute. Wall Street looks headed for a lower open today after some data out of China fell short of analyst projections. Here in the U.S., we're watching for the latest on retail sales and the weekly jobless claims numbers. The stock rally continued yesterday with the Dow and the S&P each rising almost 1% amid hopes for a coronavirus vaccine. The NASDAQ wasn't too far behind. JCPenney is moving ahead with store closures, negotiating with landlords and cutting 1,000 additional jobs in an effort to slim down during its bankruptcy proceedings. As part of the restructuring, the retailer has previously identified 152 stores for the chopping block and now says that about 1,000 corporate, field management, and international positions would be eliminated. Practically no one is buying expensive diamonds during the pandemic. De Beers sold 56 million of rough diamonds in the second quarter, down about 96% from a year earlier. Gina Cervetti, Bloomberg Radio.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, President of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seizchange.
The following is a message from PGIM.
Untitled Chapter is a safer way to get to France and beyond, with social distancing built in. There's no scrum at security, hanging around for your bags, or shouldering strangers in your seat. With Untitled Chapter, simply drive on at Folkestone and stay in your car comfortably. Then drive off 35 minutes later. Stay safe. Go Tunnel, Untitled Chapter, a safer way to France and beyond.
And action!
I was offered one.
Cut. That's not on the script.
I was offered one. Get you.
Ladies and gentlemen, I was offered one.
Come, boy. I was offered one.
Don't take our word for it. 9 out of 10 people said they were offered a great value deal with O2. Get yours today, in-store, online, or by phone.
I was offered one too. O2 Retail Exit Survey 309 of 348 agreed with the statement. O2 offered me a great value deal. For full verification, see o2.co.uk/terms.
London. Toolstation are here to help get your job safely started and finished. With over 60 branches within the M25. All open with social distancing and contactless click and collect from 5 minutes. And with 20,000 top trade quality products to choose from. Order online now for collection in London branches and get £5 off when you spend over £30 with the code LON530. So, get your job started at toolstation.com. Terms and conditions apply.
Short on time? Don't worry. You can still get your cook on with Asda. Get 3 Asda ready meals for just £5.50. Like our beef lasagna or our tomato and mozzarella panette bake. Hang up your oven gloves. We've got dinner covered. Asda. Save money. Live better. Selected stores and lines subject to availability. Meals 400 grams, £2.10 each.
Get ready for the University of Bedfordshire. We've got all you need to make ambition become reality. To make lifelong friendships. To make contacts in your chosen industry. To make a name for yourself. To make it. In fact, we've got everything except your application. So get it in, sit back and relax. Wait, actually, check out our generous scholarships and bursaries for support at every step at beds.ac.uk. Okay, now you can relax.
What have you missed the most? A haircut? A visit to the shops?
Oh, you look lovely in that.
What about a nice lunch?
Fish and chips, please.
Salt and vinegar with that.
Or an afternoon in a pub garden? Fancy a casual bike ride? Or perhaps something a little more intense? Or maybe you want a relaxing day out. Whatever you've missed, get out there and enjoy it again safely. Find out how at gov.uk/enjoy summer safely.
Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak.
It's 6:30 on Wall Street. Good morning. I'm Nathan Hager.
And I'm Karen Moscow, and we're just about 3 hours away from the opening of U.S. trading. Let's get you up to date on the news you need to know at this hour. Global stocks are falling after the latest economic ratings out of China. Data show the recovery remains uneven in the world's second-largest economy. We get more from Bloomberg's Enda Curran in Hong Kong.
The economy returned to growth in the second quarter. We had some high-frequency indicators from the month of June, which indicated industrial production doing quite well, coming back on stream there. But on the more cautious side of things, we had bad news on retail sales.
China's economy grew 3.2% in the second quarter. Industrial output matched estimates, while retail sales fell 1.8%.
Back here in the U.S., the coronavirus remains front and center. California and Texas are reporting another jump in cases and deaths. Andy Pekos is professor of molecular microbiology and immunology at Johns Hopkins Bloomberg School of Public Health.
My level of concern is probably the highest that I could probably voice right now. This is as close to the nightmare wrong scenario as we could have envisioned in terms of rolling back our public health interventions and trying to opening up our society to more activities.
Health officials in L.A. County say the region's entering an alarming and dangerous phase in the outbreak.
Back on Wall Street, bank earnings take center stage again today with results from Bank of America. Loan loss provisions will likely be in focus, according to Bloomberg's Danny Berger.
Bank of America does have more exposure to the consumer than a Goldman, for example. But we did see in prior results that delinquencies, things like credit cards, weren't as bad as we initially expected them to be.
We also get earnings from Morgan Stanley. That'll be followed by a conversation with James Gorman. Tune in for an interview with Morgan Stanley CEO at 9:30 a.m. Wall Street time on Bloomberg Radio and Television.
Retail sales data for June come out at 8:30. Economists forecast a 5% gain. And here with more is Bloomberg's Vinny Del Giudice.
In May, retail sales started to rebound, rising a record 17.7%. But Bloomberg Economics says the outlook is clouded by what it calls a disturbing trend in retail sector bankruptcies. Sales dropped by almost 25% in March and April combined, a historic collapse as businesses closed and consumers buckled down. Vinny Del Giudice, Bloomberg Daybreak.
Thanks, Vinny. Finally, we have a court ruling out of the EU that could negatively impact Facebook and other tech companies. The region's top court has struck down the so-called Privacy Shield, a method used to transfer data across the Atlantic. S&P futures lower, down 26 points. Dow futures down 193. NASDAQ futures down 170. The DAX in Germany is down 0.7%, and the 10-year Treasury up 4/32, yield 0.61%. Straight ahead, we have the latest world and national news, and this is Bloomberg.
All right, there. Thank you, Karen. It's 6:33 on Wall Street, and Michael Barr has more on what's going on around the world. Michael?
Thank you very much, Nathan. Authorities say several New York City police officers were attacked and injured yesterday as pro-police and anti-police protesters clashed on the Brooklyn Bridge. The confrontation happened hours before Mayor Bill de Blasio signed into law a series of police accountability measures. Police say at least 4 officers were hurt, including Chief of Department Terrence Monahan, and 37 people were arrested. Cities across the country are seeing spikes in violent crime amid the coronavirus pandemic. Mayor Bill de Blasio says there are plans to address the violence in Brooklyn, where a 1-year-old was shot and killed.
This weekend in Brooklyn, we'll be taking action to stop the violence. And starting on Friday, the Central Brooklyn Violence Prevention Plan goes into effect. This plan has a twofold core to it. 1, increased targeted NYPD mobilization. 2, community mobilization. Community members, community leaders, community organizations out in the streets, making their presence felt, reaching young people in new ways.
New York's Metropolitan Museum of Art will reopen 5 days a week starting August 29th. Visitors will be limited to 25% of the museum's capacity. President Trump shook up his campaign staff amid sinking poll numbers less than 4 months before the election. The president replaced campaign manager Brad Parscale with veteran GOP operative Bill Stepien. President Trump may have lost an issue advantage he had with voters, with 50% in one new poll saying they trust Joe Biden to do a better job managing the U.S. economy. The Quinnipiac University poll also gives the former vice president an overall 15-point margin. Twitter is still trying to figure out what happened during a huge security breach. Bloomberg's Ed Baxter has the story.
Some very big-name accounts were hacked. Gates, Bezos, Musk, Buffett, Obama, Biden. Twitter handles hacked in a scam to have people transfer cryptocurrency to Bitcoin. The attacks were stunning in scope and almost certainly coordinated. A Gates tweet said people have been urging him to give back, and that if someone would send $1,000 to his BC account, he would send back $2,000 a half an hour later. Twitter blocked the verified account, says it patched the hole and opened up most of the accounts. The total investigation is not over. In San Francisco, I'm Ed Baxter, Bloomberg Daybreak.
Shares of Twitter are down more than 5% in early trading. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Nathan.
All right, Michael, thanks. It's almost 6:36 on Wall Street. Time for the Burden Accountants and Advisors Sports Report. Here's John Stashour.
All right, Nathan. Jacob deGrom on the mound at Citi Field yesterday until he felt tightness in his back. It's a problem the Mets ace has had before in both 2016 and 18. Hardly bothered him that season. He had a 1.70 ERA and won the Cy Young Award. deGrom had an MRI, came back clean, so he's day-to-day, needless to say. In a 60-game season, the Mets need deGrom on the mound every fifth day. Just before the deadline for NFL players with a franchise tag to sign a multi-year deal, Derrick Henry did so in Tennessee. 4 years, $50 million, half of it guaranteed. Henry was the NFL's leading rusher last season, a big reason the Titans reached the AFC Championship game. Martin McCauley is the fan of the Washington NFL team who got trademarks for potential new names. He says he's in favor of dropping Redskins and is not standing in the way of the team using any potential name. Jonathan Kuminga, who played high school basketball in Hillside, New Jersey, is seen as a top NBA draft pick in 2021. He's the latest to decide that instead of playing 1 year of college basketball, he'll play 1 year in the developmental G League. Tiger Woods tees off just after 1 o'clock today, playing the Memorial in Ohio with Rory McIlroy and Brooks Koepka. It's his first tournament since February. In his last round, he struggled to a 77, and yet Tiger enters with his usual attitude.
I would like to say that, that I'm going to win the event. That's my intent. That's my intent coming in here. That's my intent going into every event. So that's certainly the intentions. Whether that plays out in, over the next come Sunday, hopefully that will be the case.
Won the tournament 5 times. John Stashower, Bloomberg Sports. Nathan?
John, thanks. It's 6:37 on Wall Street.
The following commentary is from Bloomberg Opinion.
Squandering assets. I'm Jonathan Bernstein, a columnist for Bloomberg Opinion. I'll defend Donald Trump on the ethics of electioneering from the Rose Garden during his press conference/campaign rally Tuesday. Yes, his recent predecessors have refrained from doing so, but every presidential action is planned at least partly with electoral politics in mind. The larger picture is this was yet another example of one of Trump's core weaknesses. He is terrible at recognizing and exploiting the valuable assets that come with the job. There's a reason for the norm that Trump violated. It was established by his predecessors because it was useful for them. It allows presidents to play 2-on-1 against the out-party candidate. There's the president while campaigning, who deserves as much media time as the challenger gets. And then there's the president while governing, who gets a whole additional ration of media time and is treated as someone everyone should listen to and respect. That second persona, the president while governing, is a huge asset for an incumbent. By failing to act presidentially, Trump has squandered it repeatedly. I'm Jonathan Bernstein. For more opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
You can hear Bloomberg Opinion commentaries every weekday at this time. Terminal customers can read more at OPIN Go. Later today, we get earnings from Netflix. The video streaming service reports after the close of U.S. trading. And here with more is Bloomberg's Charlie Pellet.
This is a stock that has surged more than 75% off of a March low, and it's now up about 60% this year. The analyst survey by Bloomberg are looking for second quarter adjusted earnings per share of $1.90 on revenue of $6.08 billion. A key metric for analysts and investors will be the number of global subscriber additions. Bloomberg Intelligence says Netflix may exceed the consensus for 7.5 million new subscribers. Charlie Pellet, Bloomberg Daybreak.
All right, Charlie, thanks. This story just crossed the Bloomberg terminal. European Union regulators plan to look at voice assistants and the so-called Internet of Things in a sweeping antitrust inquiry into how companies may use data to gain a tight grip on growing technology markets. Apple, Amazon, and Google devices are likely to be a focus for this probe, which will collect information about how voice assistants are used for music and video streaming. Dell is exploring a potential spin-off of its majority ownership in VMware. That's a move that could yield billions, but it would also separate Dell from its fastest-growing business unit. Dell's personal computer and server revenue have seesawed in recent years, and cancer drug developer Relay Therapeutics has raised $400 million in a U.S. IPO. Shares were priced above a target that had already been raised. The offer values Relay at more than $1.7 billion. The company is backed by SoftBank's Vision Fund. Shares begin trading today on the NASDAQ. Futures moving lower. This is Bloomberg.
Jenny Liss, Jewish communal leader and philanthropist, talks about why she chose the Jewish Communal Fund for her family's charitable giving.
For a lot of people, it would be the convenience factor. I don't have to track anything.
If charitable giving is an important part of your life, JCF can help you organize your philanthropy with our donor-advised fund. A fund can be established with a minimum tax-deductible contribution of $5,000. Make grants to your favorite charities, and JCF handles all the administration and reporting.
At the year end, and our board awards community grants from fees and endowment income to UJ's annual campaign. We also make gifts to specific organizations, the elderly, Holocaust survivors, the hungry. The fact that we come together as a community at the end of the year to build community, that's what makes us different.
Get better at giving back. To find out more about JCF's impact, visit jcfny.org and download the Giving Report. JCF, we have a gift for giving.
Hey, y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
This is a Bloomberg Pursuits look.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday morning by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Eurotunnel Le Shuttle is a safer way to get to France and beyond, with social distancing built in. There's no scrum at security, hanging around for your bags, or shouldering strangers in your seat. With Eurotunnel Le Shuttle, simply drive on at Folkestone and stay in your car comfortably. Then drive off 35 minutes later. Stay safe. Go Tunnel, Eurotunnel, Le Shuttle, a safer way to France and beyond.
So, you've been holed up for a while.
Not in here!
The place has got a little, let's say, lived in. At Wix, we'll create your dream kitchen or bathroom from design to show-off ready. And to keep everything safe, you can book a free virtual design appointment. Plus, now there's up to 50% off showroom kitchen units. Cure your house embarrassment safely with Wix. For more offer details, see wix.co.uk.
More time at home has shown us what really matters and how the power of us all coming together can make a difference. So let's work together to ensure there's a home for all from now on. Join Crisis in the race to end homelessness. Simply choose your distance and challenge yourself to cover it between the 20th and 31st of July. Whether you go solo or buddy up, run or walk, whether it's 5k or 50k, every step makes a difference. Sign up now at crisis.org.uk/challenge. Fundraising target applies. See website for details.
At Honda, we listened to the world, and it didn't just tell us to create an electric car, it told us how. What's that, London? You need a car that makes it easy to make sharp lane changes. Okay, and what about you, Paris? A car that parks itself? Oh la la. Milan, you need something small but quick off the mark. Good point, Frankfurt, and uber-tight turning circle for quick U-turns. Right, let's see what we can do. The new Honda E. Honda, the power of dreams.
To a network of news and financial information 24 hours a day. Powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Radio. Now, a global news update.
Congress may not be leaving office as planned this August. There's a push to have talks about another economic stimulus package to help cope with the ongoing coronavirus pandemic.
House Speaker Nancy Pelosi says Congress has to come together for a relief bill.
This isn't about government and philosophy or any political
differences of opinion. This is about meeting the needs of the American people at the time of a pandemic that has lost about 40 million jobs.
Delina Sanders is among the many Americans struggling to make ends meet in the COVID-19 era.
My business still hasn't picked up. COVID seems to be getting worse and not better. So at least here in the city of Atlanta, we're in the process, it seems like, of going back to phase 1.
I'm John Lawrence.
Unidentified hackers broke into numerous high-profile Twitter accounts. The ruse included bogus tweets from Barack Obama, Joe Biden, and a number of tech billionaires. Twitter says they're working on a fix. I'm John Trout.
It's a new disease making an unprecedented impact.
The job losses were widespread.
It is a stunningly historic moment.
Your best strategy?
Is this a market that's accepted reality?
Bloomberg Surveillance, weekday mornings at 7 Eastern on Bloomberg Radio. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and earnings are crossing the Bloomberg. We are hearing from Bank of America right now with its second quarter profit beating analyst estimates. Johnson & Johnson also beating analyst estimates with those shares up 0.5% right now. And we're going to get more on Bank of America's earnings in just a moment. Futures, meanwhile, are lower with S&P futures down 21 points, Dow futures down 137, NASDAQ futures down 150. The DAX in Germany's down 0.6%, 10-year Treasury up 430 seconds, yield 0.61%, and the yield on the 2-year 0.15%. NYMEX crude oil's down 1.1%, down 44 cents at $40.76 a barrel. COMEX gold is down 0.33%, or $6.40 at $18.0740 an ounce. The euro 1.1395 against the dollar, the yen 107.15. And that's a Bloomberg Business Flash. Now here's Michael Barr with more on what's going on around the world. Michael.
Karen, Georgia Governor Brian Kemp has voided local mask mandates as other states order face coverings to fight the pandemic. More than 137,000 people in the U.S. have died from the coronavirus. Meanwhile, with record numbers of COVID-19 cases in Los Angeles, the New Year's Day Tournament of Roses parade has been canceled. That hasn't happened since World War II. Vice President Mike Pence suggested the Republican National Committee is considering changes to its nominating convention and will prioritize the health of convention attendees as cases of COVID-19 continue to rise in Florida. Pence said there is consideration being given to having the convention at an outdoor setting. President Trump has replaced Brad Parscale as manager of his campaign, replacing him with Bill Stepien. The president is seeking to reverse a decline in the polls before the November election. And also the president said that he praised both men for their work. Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Nathan.
All right, Michael, thank you. We are live from the Bloomberg Interactive Brokers Studios. We're at 649 on Wall Street. And as Karen mentioned, earnings from Bank of America are crossing the Bloomberg terminal. Some of the hot headlines, trading revenue just beating expectations at $4.4 billion, and provisions for credit losses up to $5.1 billion. That was actually lower than analyst expectations. Let's get instant reaction and analysis now from Allison Williams, Senior Financial Services Analyst for Bloomberg Intelligence. Good morning, Allison. Thanks for being here. What's standing out for you this morning?
So far, so good. I mean, it looks like a beat on trading, as you pointed out. I'm looking to see what the fixed income equities breakout, as we saw at Citigroup, but they had better FIC and sort of lesser equities. But it looks like good trading and a very big provision, which is similar to what we've seen at others.
Although the provision is slightly lower than what many analysts were looking for, what could that tell us about what expectations are for further recovery going forward into the second half?
I think what we're going to want to hear about is what are the sort of economic assumptions baked into that provision. So keep in mind the majority of the provision relates to losses that we haven't seen yet. Some of the other banks have talked about sort of their base case and then the downside scenario and sort of what's been factored in. It does look like of the banks so far, J.P. Morgan may have set aside the strongest provision. They also have the strongest trading. So trading that's a theme we've seen this quarter in terms of the very strong trading numbers, sort of allowing them to fund that provision and be more conservative.
Now, of course, Bank of America has a lot of exposure to the consumer banking side, and it's reporting a 19% drop in revenue there, $7.9 billion. What's your takeaway from that?
I'm sorry, I didn't hear you. You were talking about
the consumer banking revenue. The number there down 19%. Is that a downside surprise?
So I think that it does look a little soft. Again, we're going to want to dig into the numbers a little bit and see what sort of the monthly trends are. I think for the banks, it's sort of less important, the weakness in the overall quarter, and more important how they exited June. And to some extent, we did see things start to normalize in some of the businesses. Businesses like auto lending seem to be benefiting perhaps from some pent-up demand. But we're going to want to see what the overall there is. By the way, FIC up 50%. That's much better than expected. So, again, I think the provision is really probably the bigger surprise, just in the sense that the reserve build is a little bit less than analysts had predicted. Also, when we compare it to the first quarter, most of the other banks had a sort of a much bigger build.
Okay, the Bloomberg Intelligence Senior Financial Services Analyst Allison Williams. Of course, we're going to have much more from you on B of A's earnings, as well as Morgan Stanley. Those results are due out any minute now, so stay with us for full coverage here on Bloomberg Radio. In the meantime, we want to get to the latest on what's happening in D.C. now. Some of the top stories from the nation's capital include Joe Biden's Twitter account being part of that massive Bitcoin hack last night. Vice President Mike Pence suggesting there could be changes to the Republican National Convention with the pandemic still going. And Justice Ruth Bader Ginsburg is out of the hospital after her latest health scare. She had been expected to be under surveillance for the next couple of days here. Also making news, of course, a major shakeup to President Trump's campaign staff. Bloomberg U.S. Politics editor Kathleen Hunter's here with more on that. There had been signals, Kate, that Brad Parscale could have been on the outs for quite some time, and now it's official.
That's right, and I think it's not a surprising move from this particular president, given that we know that whenever he feels a bit backed against the corner on the rocks, he tends to make staffing changes. So I think in that regard, it's not surprising that he's bringing someone new in at this stage, given what the poll numbers have looked like over the last couple of weeks and the speed with which the election's approaching. Although
someone new isn't exactly what you could describe Bill Stepien as, given that he's been on the campaign staff for some time. But what could this shakeup do to the campaign at this point?
That's true, and that's a good point. I mean, it's a change around the margins in that regard, but I think that always having a fresh face in there is a chance to stand up and say, you know, hey, this is a reset moment for our campaign, and we're going to, with something we saw him do in 2016, is repeatedly change campaign managers. The election's still about 3.5, 4 months off. I wouldn't be surprised if we saw, a couple more shakeups between now and then. But I think that this is a signal that they're going to really focus on putting someone who has past experience running a national campaign in place and trying to make sure that they take advantage of every opportunity to start to turn things around, given, that there's some troubling signals out there right now for the Trump campaign.
Yeah, certainly one of those troubling signals is the polling numbers that have gotten increasingly worse for the president, including on the one issue where he had been doing relatively well against Joe Biden on the economy.
That's right. And so I think that is probably a very worrying sign for the Trump campaign because, go back to January and February, and that was going to be the centerpiece of his reelection argument. Obviously, things have changed dramatically with the coronavirus pandemic and the fallout from that. And I think that, any kind of indication that voters are starting to not feel as though Trump is the right person to be leading the economy at this stage, I think would be very, very worrying again for the Trump campaign.
All right, Bloomberg U.S. Politics editor Kathleen Hunter, thanks for that debrief as well. And you can read more about the shakeup in the Trump campaign at Bloomberg.com or on the Bloomberg terminal. And as always, follow all the latest on Bloomberg Radio in Washington at Bloomberg 99.1 and 105.7 FM HD2. Karen.
Nathan, thank you. 6:55 on Wall Street. Time for the Bloomberg NJIT STEM report, brought to you by New Jersey Institute of Technology. Ranked in the top 2% nationally for alumni mid-career earnings and number 1 for student upward economic mobility. Learn more at njit.edu. Procter & Gamble products are bought by 5 billion people around the world, and everything involved in the manufacture, sale, and use of those goods generates more than 230 million metric tons of greenhouse gas each year. The consumer goods giant is now moving to cut some of its climate warming emissions. The new commitment by P&G moves to neutralize emissions from its factories and operations. By 2030, the company will cut those emissions in half and invest $100 million over the coming decade in nature-based projects such as tree planting to offset the rest. The launch of a United Arab Emirates Mars orbiter, already delayed 2 days, has been postponed further due to bad weather at the Japanese launch site. The orbiter, named Amal, or Hope, is the Arab world's first interplanetary mission. The launch, which was initially scheduled for Wednesday, had already been postponed until Friday. It'll now try to launch later this month. And Amazon is letting most corporate employees work from home until January and will continue restricting business travel because of the coronavirus. Amazon had previously said corporate staff could work remotely until early October. Employees at the company's warehouses have no such luxury because they're considered essential workers required to fulfill online orders as many Americans continue to hunker down at home. And that's the NJIT STEM report. Futures this morning are lower. S&P futures down about 22 points. Dow futures down 157. NASDAQ futures down 149. The DAX in Germany is down 0.7%. 10-year Treasury up 3/32, yield 0.61%, and the yield on the 2-year 0.15%. NYMEX crude oil is down 1.25%. It is down 51 cents at $40.69 a barrel. And we continue to watch Bank of America down 2.25% this morning in early trading. Much more on those earnings straight ahead on Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. For Nathan Hager, I'm Karen Moscow, and this is Bloomberg.
Influential country.
Bring the magic of theatre and musicals directly to you with Showcase at Home, the new streaming service from Showcase Cinemas. Enjoy new releases you'll love, classics you already adore, and award-winning musicals that'll have you singing along, including An American in Paris, La La Land, and Funny Face, plus the wonderful new documentary, Repeat Attenders. Rent or buy now. Just search for Showcase at Home or head to showcasecinemas.co.uk.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday morning by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
4 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio.
The stock market is missing its point. This is not a balance sheet recession.
We actually like the fact that the yield curve is actually widened a little bit, and more specifically has steepened a little bit. That's something that's a healthy thing for the economy.
The market right now seems to be saying that Jerome Powell is far more impressive and important than Donald Trump.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning. This is Bloomberg Surveillance with equity futures negative. We're live on Bloomberg TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. On this Thursday morning, Tom Keene, we are stacked with event risk going into the weekend.
Massive event risk. Yes, the ECB. Guy Johnson tells me it's a yawn, or John, you'll explain that to me later. But far, far more important importantly, John, will be American economic data around your interview with James Gorman. Yes, the J&J guidance question. Yes, all that's great. Lisa's going to brief. But I'm sorry, retail sales, and on this Thursday, again, jobless claims. For me, that's front and center.
Into a news conference with President Lagarde, into a weekend with a big meeting of European leaders. Love this line coming out of Bank of America, Lisa, this morning, that we have faced the most tumultuous period since the Great Depression. That line after delivering record investment banking fees firm-wide for the firm. Just trying to reconcile those two things for us.
So this is the conundrum for banks right now. They're experiencing perhaps a record boom in investment banking fees and trading fees at a time of incredible uncertainty, and it's really coming on the heels of fiscal stimulus. And the question is, how do they sort of pair these realities? We're going to be hearing more about that coming up with the ECB. We're going to get that decision at 7:45 a.m. I am watching it, even though Guy Johnson calls it a snoozer, and we're also going to be watching and taking the 8:30 a.m. press conference, which hopefully will be less of a snoozer. At 8:30 a.m. also, Tom, to your point, U.S. initial jobless claims and June retail sales. June retail sales already ancient history, yet we can get a sense of how much momentum there was going into this resurgence of virus cases. Also, aside from Morgan Stanley earnings coming out in about 15 minutes' time, we're also getting Netflix earnings after the bell. Interesting to see whether some of the high flyers, the fan mag names, can prove their worth, John.
You would never catch me characterizing an ECB news conference that way, would you, Tom King?
Never. I would never see you do that. Let's be clear.
Seriously?
I said it, not Guy.
You said it, not Guy.
And so did John Farrell.
As I said earlier, John, this is a medical issue. Madam Lagarde's job today is first do no harm, right?
I would agree with you. Get to the weekend and put the pressure on European leaders on the fiscal front. That's the big story for us this morning. Equity futures down 20 on the S&P 500. We're down 0.6%. A real choppy couple of weeks for this equity market. Is the rotation back on? Let's start the conversation this morning with Julian Emanuel, BTIG Chief Equity and Derivatives Strategist. Julian, great to catch up with you, buddy. Going back to Friday, the equal weight S&P outperforming a market cap weighted S&P. Is this the rotation again or another head fake?
No, it's the rotation again with a slight difference here. Okay, the problem that we have over the last several months is that the large names in the S&P 500 index have become such an overwhelming percentage of the index that even though on balance the rotation into cyclicals, and real laggards is likely going to be positive long term, it's definitely a headwind in the near term because you're in the middle of unwinding a great deal of momentum that's accumulated.
Julian, what are you doing right now? I mean, I'm sort of jumping ahead of the conversation here, but what is your action plan for equity investment and trading right now?
Right. So broadly, in our view, we think that if you look at the S&P 500, you've been in a trading range for really around 2 months at this point. We actually think that range continues, but again, we think that the momentum names are going to unwind. So we want to hedge the NASDAQ exposure, hedging QQQs, and we want to take some chips off the table in some of the very highest flying names, which we think come earnings season reports, it's really going to be difficult for them to, get any forward price action because the expectations are very high as opposed to some of the more cyclical names. Financials, for example, obviously the reports have been choppy, but you've seen better revenue from the trading side. But their expected earnings are down over 50% quarter on quarter, so it's really hard to see downside to those numbers, and consequently we think those stock prices stabilize as the season moves on.
Julian, the high flyers you expect to unwind, does that mean that they are going to decline in a major way? The Facebooks of the world, the Netflixes of the world, perhaps the Twitters of the world, which we're seeing down about 6% ahead of the market open today, or does that mean they're just going to underperform some of the cyclicals?
Well, we think you could see NASDAQ come off around 10%. I mean, if you think about it, coming off 10%, it's really not that much, considering that we've moved about 12, 13% higher in the last month alone, and off the low we're up well over 50%. It's really in a lot of ways sort of going to blow the froth off the market, and likely in the long term would be a healthy development.
Well, Julian, relative to the move off the bottom, 10% might not be a lot, but I just wonder if you get a 10% move lower on the NASDAQ, can you get a move higher on the S&P 500? Just real simple maths, Julian. I struggle to see how that can happen.
No, it's not likely going to happen, which is why we think, basically the trading range that's broadly defined, 29.65 on the bottom in the S&P, and the recent highs this week of around 32.35, 32.40. We think that's going to prevail, and depending on the severity of the NASDAQ pullback, you could probe the bottom end of the range in the S&P.
What I'm hearing from you, Julian, is some kind of asymmetric risk towards the cyclicals doing better because the bar is so low. Is that a fair characterization of things?
Absolutely, John.
Talk to me about the VIX curve as well, going out into November, because a lot of people think we're going to see some real choppiness coming out of the summer.
Well, there's no question about it, but positively, when thinking about the election, the hedging over the election term has already caused the VIX curve to bulge, as well as skew in options. The price of downside puts versus upside calls to hedge the election is historically expensive. Generally, when that happens, it sort of means that the worst is priced in, and you're likely to get a positive reaction regardless of how the election sorts itself out. It's just, the lessening of uncertainty, presumably that we're going to have a winner on the morning of November 4th. But for us, the risk, again, is really more in the near term, looking out towards the end of the summer and Labor Day, because of the accumulating pressure in the NASDAQ, and because you had this incredible volatility slingshot where the NASDAQ's VIX, VXN, it was trading at a discount to the S&P 500 back in April, which was part of our bullish call in April, and now it's at a massive premium. That kind of slingshot, coupled with Monday was a very key day. You traded over 2% above the prior day's high in the NASDAQ and closed below the low. That's only happened 3 times in the history of the NASDAQ. Lower prices were in store on all 3 occasions.
Julian Emanuel with us, folks. Futures at negative 20, a little bit better tape than we saw an hour ago. Julian, I'm going to ask you a really dumb question, and we do this because I know a young hipster like you only buys ETFs. I remember U.S. Steel and Anaconda Copper as a cyclical. What's a cyclical?
It's probably, for the most part, something that has depressed valuations and is reflecting the continuation of an economic recession, which we don't share. But broadly, it's really the swath of financials, industrials, materials, and energy, really broadly speaking.
We're speaking with Julian Emanuel of BTIG. I'm still stuck on this idea of the unwind within the big tech names and the fact that this is going to come on the heels of earnings, yet there's been so much disparity between some of the big tech names. And I think this is important to point out. You've got the likes of Netflix and Amazon gaining more than 60%, Facebook up only 17%. Are the losses going to be concentrated in specific names, or will this be a broad-based technical unwind that will be something of a correction more broadly?
It's probably going to be elements of both, but we would expect the highest flyers to probably correct the deepest. And again, because if you think about it, part of what's been unusual about the last couple months is public participation in the markets. It's literally at record, however you measure it, particularly in options activity. And again, some of the highest flyers really are where the public is concentrated, and we think not dissimilar to what you sort of saw in February as the market first started coming off. Those names are most vulnerable.
But this is really important, and it goes back to what Lisa said earlier. Julian, are you looking at the so-called high flyers to go down on an absolute basis or a relative basis?
No, at this point, it's likely going to be absolute. It's part of our view that NASDAQ can correct 10% from here.
Julian, great to catch up with you, sir. Julian Emanuel there of BTIG. We've got a lot coming up, Tom Keene. We have jobless claims at 8:30 Eastern, along with retail sales. Shortly after that, President Lagarde addressing an ECB news conference. In just a moment, though, Tom, we are going to get more bank earnings. And after Goldman Sachs yesterday, that bar for Morgan Stanley creeps a little bit higher.
Absolutely fascinating to see what Morgan Stanley does after the really nuanced Goldman Sachs report yesterday. I don't have a clue what they're going to say, John. I know you're going to glean that from Mr. Gorman here in an hour or so. You're going to be in a 3-hour conversation with him?
2 hours and 20 minutes, I think that interview is, Tom, and I think we've got about 10 minutes. I'd love an hour with him, but I think Morgan Stanley have given us 10 minutes. Tom, we have to talk about this, and we've also got to talk about the record levels of revenue across various units in these banks and how this happened with the economy on its knees. And there's a pretty simple explanation for it, Tom. The Federal Reserve left the door wide open for corporations in America to issue debt. The banks have done a fantastic job making a lot of money off that activity. The Federal Reserve has also stimulated some big moves in equity markets. Fiscal policy as well has enabled these things to happen, and the banks have done really, really well. And Tom, there's a real risk here that they become a political football again because they're doing well at a time when the economy really is not.
No, there's no question about it, and that's Ben Bernanke 101. And I'd noticed his op-ed in the last 24 hours, 48 hours, John, where Chairman Bernanke makes very clear this stimulus has to not help the banks this time around, but it's got to help the states and local governments.
And that's going to be the debate this month down in Washington, D.C. In your equity market right now, we are down 0.6% on the S&P 500. In just a couple of minutes' time, we'll get the numbers from James Gorman's Morgan Stanley, and then we'll catch up with Bloomberg's Sonali Basak. And next, Chris Kotowski of Oppenheimer, senior analyst from New York City, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. This is Bloomberg Surveillance.
Now with the latest news from New York City and around the world, here's Michael Barr.
Tom, John, Lisa, thank you very much. Georgia Governor Brian Kemp has voided local mask mandates as other states order face coverings to fight the pandemic. More than 137,000 people in the U.S. have died from the coronavirus. Dr. Anthony Fauci weighs in on various White House staff taking shots at the nation's leading infectious disease authority. The latest blast from White House trade advisor Peter Navarro, who wrote in an op-ed in USA Today, Anthony Fauci has been wrong about everything I have interacted with him on. Fauci, who continues to serve on the president's coronavirus task force, told the Atlantic magazine the attacks are bizarre.
If you talk to reasonable people in the White House, they realize that was a major mistake on their part because it doesn't do anything but reflect poorly on them.
Secretary of State Mike Pompeo has downplayed the possibility of another summit between President Donald Trump and North Korean leader Kim Jong-un before U.S. elections. Pompeo said Trump would only want to engage if there were real prospects of progress. North Korea has insisted it would no longer gift Trump high-profile meetings he could boast as foreign policy achievements when it's not being substantially rewarded in return. Meanwhile, Pompeo at his weekly briefing had a note of optimism concerning the European Union's current travel restrictions on Americans.
We know there's a way to safely travel, to make sure people come here. We don't create risk for them when Americans travel to their country, and they don't create increased risk when they travel here. We know there's a way to achieve that, and we're going to do it. We're going to do it as quickly as possible.
The Trump administration is conducting a formal review of Chinese-owned social media apps TikTok and WeChat for possible national security risks, which could conclude in a matter of weeks. Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg Surveillance with Tom, John, and Lisa.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro, waiting for Morgan Stanley earnings to cross the Bloomberg terminal. We heard from Bank of America around about 30 minutes ago. A little bit later after the close, we'll hear from Netflix as well. Going into those numbers, equity futures right now down 0.7% on the S&P 500. We're off by 22 points. In 1 hour and 16 minutes, we will get more data in America. Retail sales and jobless claims very very much in focus. Yields into that down a basis point to 0.62%. In foreign exchange, an interesting 48 hours coming up for Europe, that's for sure. Euro dollar just south of a 114 handle at 113.99 and down around about 0.1%. That is a weaker euro, slightly weaker euro going into this ECB decision 30 minutes away, and an ECB news conference 45 minutes after that, and then the attention shifts very quickly to fiscal authorities. There's the data from Morgan Stanley. Here's the numbers. Let's get the breakdown. Let's bring in Bloomberg's Shonali Basak. Hey, Shonali.
Hey, John, there's a beautiful beat there in that fixed income sales and trading revenue there. Remember, Morgan Stanley's fixed income business is smaller than its peers. They are punching above their weight here. The question is, how does it compare and what are the market share gains? Wealth management revenue misses estimates. That beat estimates. Wealth management is the most sensitive here, right? Morgan Stanley has a lot of clientele. The question is, are the wealthier clientele spending their money, or are they hoarding it at this time? Earlier today, we saw Bank of America consumer spending dropped off quite a bit. So we'll look, because Morgan Stanley and Goldman have the greatest share of corporate clients here.
My first look at this, John and Shonali and Lisa, is this is an extraordinary report. I'm looking at return on equity published 15.7%. Return on tangible equity is a ginormous number. If I'm looking quickly here at their very clear presentation, John, this is really an exceptional report on first blush. I would also note that compensation expense and the expense efficiency ratio, John, that's why you didn't go to the Yankees with the Morgan Stanley people this spring as they were trying to save some money. They did.
Hey, Tom, it's not usually me that goes to the Yankees with the Morgan Stanley people. I'm not sure who does, but it's certainly not me. Look at another number crossing the Bloomberg, the second quarter equities sales and trading revenue coming in at $2.62 billion, Tom. Upside surprise there, the estimate 227. I do wonder, Shonali, what an estimate is worth in an environment like this one. Our team, including you, crunching the numbers. The estimates were wide for several of these big names reporting this morning.
And what was surprising, you can see right away after Goldman reported, the bar was very low for Morgan Stanley. But going back to Tom's point, that 15% return on equity is putting them in line with their goals, their longer-term goals. Goldman was at 11% yesterday, and we wanted to see if they would at least keep on line with that, but they're showing a strong beat.
Coming up a little bit later this morning, we'll be catching up with James Gorman alongside Shonali Basak. We'll be doing that at 9:30 Eastern Time. Tom, looking forward to that conversation. A lot to get through. You'll remember coming out of the last financial crisis, the last recession, it was all about knowing when the world around you had changed and whether you need to adjust the strategy. Morgan Stanley got it right. I wonder how different this moment is for this bank.
Just really interesting to see the nuances of Goldman Sachs and Morgan Stanley yesterday. What we're trying to do at Bloomberg Surveillance, particularly within this pandemic and the banking season, is give you voices of experience, people that have seen once-in-a-lifetime crises, well, a few times in their life. The heritage of the Oppenheimer and Company in securities research is a gentleman named Myron Picot. When you were younger, when I was younger, I would say Myron Picot was a required read on Wall Street. Christopher Kotowski has carried that forward with a long tenure at Oppenheimer over to Lyric Swan, and he came home to Oppenheimer again, and we're thrilled that Chris Kotowski could brief us on the banks of this nation in this time of crisis. Chris, these are extraordinary numbers for Morgan Stanley, aren't they?
I think just across the board, the trading numbers are, off the charts. We have yet to compile them, but it's all some variety of good, somewhere up 40 to 100% or plus, more than 148% at JP Morgan. But I think the thing is, let's not lose the trees for the forest here. We shouldn't expect these kinds of extraordinary trading revenues to continue. And the other thing, though, to keep in mind about all these big earnings reports is that the provisions are just an accounting phenomenon. Provisions don't create or destroy a single dollar of capital. They are just an accounting entry. What that takes capital from the right-hand side of the balance sheet, what was equity, and moves it to the left-hand side of the balance sheet and calls it a loan loss reserve. What creates capital is pre-provision earnings, and what destroys capital are loan losses. And as we've gone through these earnings reports here, one after the other, all these banks have reported their pre-provision earnings have been stronger than expected. And yeah, it is mainly due to the trading desk this quarter, yes. And the loan losses have been less than expected. That said, we know that, as the COVID lockdowns go on, there are going to be elevated loan losses somewhere down the line. But on some level, there is nothing to read into the size of the loan loss provisions that you're seeing now, because as much as I respect Jamie Dimon doesn't know where the country's unemployment rate is going to be in the first quarter of 2021.
Yeah.
Right?
Well, Chris, you raise a really good point, which is that the trading revenues cannot continue. The investment revenues cannot necessarily continue at the pace that they have been, and yet Morgan Stanley is getting rewarded for a massive beat, and you're seeing Bank of America fall off, at least with pre-market trading. Can you explain the behavior of the trading ahead of the market open based on the early results that we've gotten?
I think what is going on in general with this is that the investment banks are going to get through this quicker, easier than the commercial banks. So if you think about Goldman Sachs and Morgan Stanley, they are historically investment banks. They don't have big loan books, right? So Morgan Stanley's loan book is like 1.5. Morgan's and Goldman's loan book is like 1.5 times their tangible common equity. And whereas for a typical regional bank, it would be 6 or 7 times. So, the normal banks are going to face a bigger wave of losses than the investment banks. And I think that's one reason why these stocks are breaking out better than the commercial banks. And on top of that, for both Goldman and Morgan, I think there's a low loss content in their loan book because, the loss is going to be focused in consumers, credit cards.
Hey, Chris, I think we've got a bit of a problem with your line, sir. I'm just going to jump in. Chris Kotowski there, Oppenheimer and Company, Senior Analyst and Managing Director. Thanks for joining us, sir. I think we've got a little bit of a problem with that line, Tom. For me at the moment, and I hate to keep bringing up the political question, we see it again and again as these numbers come out. Just fantastic numbers, Tom, at a really difficult time for this country. And the problem for me goes back to something we discussed on this program just a couple of months ago. When you engineer monetary policy, fiscal policy, it shows up in markets like that, shows up in the real economy much, much later. Who gets the leverage, the performance in markets before anybody else? The banks on Wall Street. And that's not to say the objective of this was to help Wall Street and nobody else. Quite clearly, that's not the case, Tom. To keep the credit market wide open, the objective was to keep these companies financed and keep the payroll levels maintained through a really difficult time for this economy. But what do you see the banks do? They get to leverage the debt underwriting story in a massive way. What do you see in the markets? You get that lift. They get to leverage that story as well. So we have this scenario, Tom, where you have elevated unemployment levels, the labour market still on its knees, and record numbers across unit after unit across Wall Street. And there's a real risk here that they become a victim of their own success in the months to come.
Well, you're going to bring it up in your own charming way with Mr. Gorman. I have no doubt about that. John, what I would find interesting is the idea there's no such thing as a free lunch. I'm sure that all of our listeners and all of our viewers on Global Wall Street are saying, okay, stimulus, Fed action, maybe some good fortune of the strategic plan of, say, Mr. Gorman and Mr. Moynihan and the others. That's all great. But somewhere out there, there's got to be a price to this, John. And that's a huge mystery, what that's going to be, what that price is going to be, and the when of it as well.
Well, Lisa, I think Jamie Dimon at JP Morgan put it well earlier this week. This recession is not normal. You will feel this recession. You just haven't felt it in the same way yet, but you will, Lisa, and that seems to be the takeaway, just listening to the guidance across the C-suite that we've heard so far this week.
John, the price to pay perhaps can be seen in the loan loss reserves, which have been built at an unprecedented pace and perhaps are more than people are expecting the banks will need. Look, there's a question of what will be the area of growth without the federal stimulus, right? And I think that that's what a lot of analysts are looking to in some of these earnings. Yes, there is that political question. If this largesse continues, it will be a real question. If it doesn't, the banks will be considered a bastion of stability in a very difficult time, John.
Well, key to that, Lisa, Tom, we need to see the consumer start to recover. We need to see the labour market on a really positive trend for a serious period of time. The problem that we have right now is that it feels like we've entered that next phase where the C-suite, the CEOs, look at the world around them and think we need to make some permanent changes. You see it at American Airlines in the last 24 hours. You've seen it at United, and you've seen it in other places as well.
You know, John, I know you were walking in the door at 6:52, but sometime before that, I noticed the way the Wall Street Journal and Bloomberg reported the American Airlines. In the articles, they were talking about firings and layoffs, but this word furlough is still floating around. And with jobless claims coming up here in an hour and 5 minutes, I'm sorry, I still don't know what a furlough is, John, in this American economy.
It's a temporary layoff where you think you're going to get that job back, Tom. That's the story. And whether that turns into something more permanent, I think that's what we're grappling with right now. Anyway, as for me getting up, Tom, I'm running up the Upper East Side at 4:10 in the morning. You know, can we talk about your morning schedule as well?
I'm running too.
You're running down Fifth Avenue?
No, I'm running to chase vet bill out the door.
Coming up on this program, Jeffrey Akamoto, IMF First Deputy Managing Director from New York City this morning, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Busy couple of hours ahead, right here from New York. This is Bloomberg Surveillance.
The following is a message from PGIM.
Welcome to Outsea in 60, Perspectives from PGIM Thought Leaders. Here's Mark Baribeau, the head of global equity at Jennison Associates.
You're looking at bigger implications of technology playing a role in keeping us all connected, giving us access to information or goods very quickly. So we don't see any of those trends changing. In fact, they're likely to accelerate. There's some new things that have come along, though, that people might find useful, like telemedicine. There were skeptics about that, and I think the more people using it, especially the more doctors are using it today, the more they're liking it. You can see more patients. It can be more effective. It might actually be a better solution.
Hear more PGIM perspectives at pgim.com. That's pgim.com. Partner with PGIM, the investment management business of Prudential. These statements are not intended to be investment advice and should not be used as the basis for any investment decision.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
This is a Bloomberg Money Minute.
Untitled Chapter is a safer way to get to France and beyond, with social distancing built in. There's no scrum at security, hanging around for your bags, or shouldering strangers in your seat. With Untitled Chapter, simply drive on at Folkestone and stay in your car comfortably. Then drive off 35 minutes later. Stay safe. Go Tunnel, Eurotunnel, Le Château, a safer way to France and beyond.
What have you missed the most? A haircut? A visit to the shops?
Oh, you look lovely in that.
What about a nice lunch?
Fish and chips, please.
Salt and vinegar with that.
Or an afternoon in a pub garden? Fancy a casual bike ride? Or perhaps something a little more intense? Or maybe you want a relaxing day out. Whatever you've missed, get out there and enjoy it again safely. Find out how at gov.uk/enjoy summer safely.
Times Radio, an exciting new national speech station, is here.
Featuring live news,
analysis, conversation,
and the unequivocal world-beating journalism of The Times.
Join Asma Mir and me, Stig Abel.
I'm John Pienaar. Join me on Times Radio.
Join me, Mariella Frostrup.
I'm Giles Corrin.
Hello, I'm Kathy Newman.
This is Michael Portillo.
Join me, Carol Walker.
I'm Hugo Rifkind.
Times Radio is here. Search Times Radio on TuneIn to listen.
A busy Thursday morning. Good morning to you all from New York City. This is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. 60 minutes away from initial jobless claims and retail sales in America. An ECB decision 15 minutes away. Here's your price action cross-asset worldwide. The euro just a little softer. The dollar stronger against the bulk of G10 this morning. A mild move lower on the S&P 500. Just clinging to that 3,200 level. We are down by 0.6% of 1%. In the bond market, yields in a single basis point to 0.62% on a US 10-year. Tom Keene, a lot of data out in America a little bit later. Overnight, we heard from China. GDP might be better than expected, but I know a lot of people just zoomed in on retail sales in China underperforming.
Yeah, exactly, John. And I don't know if I trust the data. You know, the turmoil. This is nation to nation. It's not about China. But I don't know if I trust the U.S. data that's coming out today. Again, retail sales. And I'm really interested, folks, if we continue to see this gradual improvement in jobless claims. Right now, as we look to Europe and the ECB, as we look to America, bank earnings, James Gorman coming up later on Bloomberg, I want to speak with Jeffrey Okamoto. He is the American representative to the International Monetary Fund, the first deputy managing director, the seat of John Lipsky, of David Lipton and others over the recent years. And we're thrilled that Mr. Okamoto could join us this morning. Jeffrey, there is a change at the IMF, and that will be the language of your regional economic outlook for the Asia-Pacific region. The next time it's published, I think of the fancy title for Hong Kong, the resident representative for People's Republic of China, Hong Kong Special Administrative Region. The politics and indeed the reality has changed in Hong Kong. How will the IMF adapt to a new Hong Kong?
Thanks, Tom, and it's great to be with you here this morning. We're still assessing kind of the broader geopolitical issues that surround the future of Hong Kong and the U.S.-China relationship. But suffice to say that Hong Kong's business model is being challenged by actions that have been taken on both sides here. And I think one thing that's important to remember is that Hong Kong is an important place for the world to transact. It's an important financial gateway for China, and it's an important financial gateway for the rest of the world. And at some point, people have to balance or figure out how they weigh these two things in their mind as they go forward.
The study of leakages and interdependencies of Gita Gopinath is different than you. I think of your term at KPMG as well. How will the Pacific Rim adapt and adjust to an assertive Communist Party in Hong Kong? Does the IMF suggest the simplistic idea that Singapore will pick up business, or can there be economic gain for other nations?
This is a chance for firms to decide where they want to do business in light of what's going on. Asia is a big place, and there are many places where there's quite a bit of financial activity. The question is going to be which place sets the conditions right for the capital to flow through that jurisdiction. Hong Kong has proven itself over time as having a very stable and predictable monetary policy, well-governed financial sector. These kinds of things are important for fostering this kind of activity in your area, and we'll see if other regions decide to compete. I think we want a system of competition because that leads over time to best results, obviously.
Jeffrey, we're talking about this amid a backdrop of slowing growth in general, malaise, a concern about an acceleration of some of the weakness. And the IMF expects that medium and small business bankruptcies could triple to about 12% from 4% currently by the end of this year. What do you hope that policymakers do to stave this off?
Right now, we're at a critical stage in the crisis, which is we're trying to protect the productive capacity of the economy, right? That comes down to two things. One is protecting literally human capital, so protecting people's lives and protecting their health so they can work productively on the other side of this. And the other is protecting firms that would have otherwise been viable businesses. The challenge is understanding which ones are viable and which ones aren't at this stage in the crisis. And so the type of firm-level support that is being provided, whether it's by the U.S. or European governments or others, is absolutely critical and is needed to kind of make sure that businesses that can see the other side of this don't have to go through a restructuring that is unduly complex and costly.
Mr. Okamoto, the first time I heard the word macro-prudential was from the August John Lipsky, standing in the room of the Council on Foreign Relations, and people, to be blunt, folks, were scared stiff. It was after the financial crisis. Do we have enough humility right now, sir, of where we are? Your managing director has made it real clear in Bulgarian bluntness the situation we're in. Do we understand the crisis we're in and the risk to our international system?
Well, the managing director is good with Bulgarian bluntness. I don't know what that gives me, but on the issue of whether we understand what's happening, as this has gone on longer than people expect or initially expected, I think the reality has set in that your policies have to be calibrated for the longer haul, and that means a different type of approach potentially than what you were taking in March or April. We're seeing economies having to grapple, for example, with reopening. That's a difficult process. A partial reopening still puts economic and financial strain on the system, and that is going to need a lot of thought in terms of how we get through this. At the IMF, this is a question that we're studying quite intensively. We're trying to be responsive to members that are at various stages of reopening and helping them set their policies. In other words, winding down the ones that are no longer needed and starting up the new ones that are needed for this juncture.
Jeffrey, how should policymakers decide which companies to save and which to let go to bankrupt?
That's a $1 million question on how to sift through these companies. Some businesses were struggling at the beginning of this, and for all realities, say they're not going to make it, or they were never intended to make it, but did benefit from firm support. But what we need to think about is what has structurally changed in the context of a pandemic. Certain sectors are simply not going to be as economically viable, given how their business model works. If these are places where a lot of people are gathering, if this requires a lot of human-to-human contact, if the business model can't adapt to one that is socially distant and contactless or virtual, that's not a business model that is likely to survive through this without a substantial amount of support. The question is well, how do you bridge them along the way in the most efficient way possible? There are a variety of ways that we're seeing countries do this. Each country is going to have to take its own approach.
On one hand, you have this concern about emerging markets and this call for writing down a chunk of the debt so that a lot of corporations and sovereignties can continue. And on the other hand, you have this call to add on debt to companies that are struggling in order to keep them going and bridge them to the other side. At what point are you talking about zombie companies, about the zombification of corporations around the world and the concern about growth on that in the longer term?
Good question. The one thing I think we have to analytically analyze, and this is something that authorities in governments, a lot of this will depend on the insolvency regime that's in place in each jurisdiction. But a lot of what you have to think about is if you're a business and you weren't able to produce or as much revenue as you were anticipating in January of this year, and now you've had to borrow to bridge your way through this. You now have effective balance sheet. You have a load on your balance sheet that you're going to have to repay at some point, even if the interest rate on that debt is 0%. That's cost to you, and your business going forward has a higher cost structure. So if you're thinking about a higher cost structure and a lower revenue base, you're going to have to take a critical eye to say who can't tolerate that, even though loans may be available today. You have to take a close look at which firms won't survive under that kind of strain.
Jeffrey, just to wrap things up, just finally, let's finish with Europe. We all watched the economic tragedy unfold after the last economic crisis. We spent 10 years watching the continent compromise their way to mediocrity and suboptimal outcomes again and again and again. Going into a massive weekend this Friday with European leaders, what's the IMF's message? What's your message, Jeffrey, for the Europeans this weekend?
I would say keep the eye on the prize. There's obviously a very consequential ECB decision that's forthcoming in just a couple of minutes here. It's a big weekend to try and sort through, and more important than just the policy issues surrounding coronavirus and assistance is how Europe is going to sort through questions that affect the member countries and chart a path truly to growth and prosperity. Growth isn't going to come in a one-shot, assistance package from the European authorities. It's going to require a commitment to, long-standing things that we've all understood, right? Which is increasing productivity, improving competitiveness, and we'll see. We wish the Europeans well as they try to sort through these difficult issues.
I think we all do. Jeffrey, fantastic to hear from you, sir. Jeffrey Okamoto there, IMF First Deputy Managing Director. A huge weekend coming up, Tom Keenan. It starts really with this ECB decision in 5 minutes' time. No one really expecting much from the ECB today, but don't rule out President Lagarde just putting a bit more pressure on these leaders going into the weekend.
Am I right, John? I mean, you're more up to speed on this, folks, than I am. I'm worried about the tots. But, John, to be direct about this, it's not what they do this weekend in Europe. It's the consequences if they don't do it.
I would agree with that, Tom. We need to see some progress. I don't think anyone expects a conclusion to this saga this weekend, but we need to wake up Monday morning with some real progress.
They did something. Yeah.
Some kind of mechanism, something to move forward with and negotiate on, Tom. And if we don't, I think it's fair to say that if we don't, redenomination risk becomes a real thing again. The likes of Italy, Spain and others as well, they need to help their economies recover from this pandemic that they have really been hit by in the last several months. They can't act counter-cyclically, Tom, in the way that Germany and the United States does. Italy does not have that space. But if we can do something on integration, on fiscal transfers, it just allows them to do a little bit more.
Well, it's going to be important here, and we're going to see it begin now with the headlines here in a moment. John, with his great expertise on Frankfurt, is going to dive into those headlines. But, I'll say, John, between the U.S. economic data out in 45 minutes and what we see beginning now in Europe, this is a Thursday of consequence.
Going into that rate decision, the euro just getting a lift, getting back to 114 at 114.09. We are almost unchanged on the day. Up next, after that decision, we'll catch up with Alberto Gallo, Algebris Investments Portfolio Manager from New York this morning. Good morning from us all. This is Bloomberg.
Now with the latest news from New York City and around the world, here's Michael Barr.
Tom, John, Lisa, thank you very much. Despite pressure from the Trump administration to reopen this fall, several large school districts are announcing kids will not immediately return to classrooms. Bloomberg's Martin DeCarroll reports.
In Houston, the seventh largest school district in the country, Superintendent Granita Lathan says some 200,000 kids will receive live teaching via video conferencing.
Virtual instruction will continue for the first 6 weeks.
In Miami-Dade County, Public Schools Chief Alberto Carvalho says the unfolding public health crisis makes reopening classrooms impossible right now.
It is actually counterintuitive and dangerous.
And in the D.C. suburb of Prince George's County, distance learning will continue into February. The announcement's a week after President Trump said he'd cut federal funding to school systems that defied his demand to fully reopen. In Washington, Martin DeCarroll, Bloomberg Radio.
President Trump shook up his campaign staff amid sinking poll numbers less than 4 months before the election. The president replaced campaign manager Brad Parscale with veteran GOP operative Bill Stepien. Unidentified hackers have broken into the Twitter accounts of technology moguls, politicians, celebrities, and major companies in an apparent Bitcoin scam. It included bogus tweets from Barack Obama, Joe Biden, and a number of tech billionaires, including Amazon CEO Jeff Bezos, Microsoft co-founder Bill Gates, and Tesla CEO Elon Musk. The fake tweets offered to send $2,000 for every 1,000 sent to Bitcoin. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts, more than 120 countries. I'm Michael Barr. This is Bloomberg Surveillance with Tom, John, and Lisa.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. We are 45 seconds away from an ECB rate decision. Overwhelmingly, the street and elsewhere across Europe not expecting any changes to monetary policy here. The focus will be on the news conference in 45 minutes' time in Frankfurt, Germany, with President Christine Lagarde. Going into this, here's the price action. Cross us at worldwide. Let's start with equity futures here in the United States. We are down still. We're off by 19 on the S&P 500. We're off by 0.6%. NASDAQ futures underperforming again this morning. That's been the story for the last several days. Big tech starting to break down a little bit. The cyclical areas of this market having a pickup. 10 seconds away with the euro coming off the lows of the session, getting back to that 114 handle at 114.00, down 0.1% on the session so far. Treasury yields coming in a single basis point to 0.62%. In 45 minutes' time, you will get claims data and U.S. retail sales as well. That's the data front for the United States. Over in Europe, it's all about an ECB decision now and then into tomorrow for a meeting of European leaders. Just to give you a flavour of where the European bond market is trading right now, we'll start with Germany with a 10-year coming in a single basis point to negative 0.45%. There's the decision. Rates unchanged as expected at the ECB. The refi rate at 0%. The marginal lending facility coming in unchanged at 0.25%. The deposit rate still negative 50 basis points. Here's the line from the ECB. Pandemic bond buying program at 1.35 trillion euros. Most people expecting this year and next year bond buying to be something in and around 2 trillion euros. So they leave rates unchanged, Tom. The pandemic bond buying program still at 1.35 trillion euros. The ECB pledging, as they have been doing, to reinvest maturing bonds at least through the end of 2022, Tom. So even when they stop buying, that reinvestment of those bonds maturing will continue, and it's unlikely they're going to start raising interest rates before they stop that process, Tom. So we've got rates low for a whole lot longer.
I mean, there's a certain set of complexities here among, 27 or 67 flavors of nations. But, John, I think one of the blunt instruments here, before you take us to our good guest, is this idea of, are they in recession? It's presumed that the United States was in recession and with a ton of stimulus has escaped recession on about now. Don't hold me to that, folks. John, can we say the same thing for Europe?
Europe is absolutely in recession, Tom. And this discussion that they're having going into the weekend is about stimulus that won't be deployed until early 2021. For me, this is about how you rate Europe and whether we re-rate Europe. If you see further fiscal integration this coming weekend, Tom, that's going to be critical on the value you place on European assets. As for the recovery itself, this stimulus is not going to hit until 2021. That's a long, long way away, Tom. So think about what we're discussing here in the United States. We're in a rush to try and get a fiscal package together before month end. The Europeans are dragging their feet over money, Tom, that won't be deployed for another 6 months.
What's the so what on that? Come on, John. What is the so what on that? I mean, the U.S. is slow. I don't mean to make light of it. There's a lot of people watching and listening to us that are really struggling and their families are struggling. But in the U.S., we're trying to get the check to them. What are we doing with this whole timeline in Europe? I just don't understand.
Tom, this has been going on for 10 years. Fiscal transfer.
Some would say since Monet.
Will they be loans or will they be grants? And it's been going on a whole lot longer than that, as you know, Tom. European integration is a problem. We have more frugal countries that do not want to share the burden of the likes of Italy, Spain, and elsewhere. They believe that these countries should act like you and I should manage our household finances. As we've seen in Europe, the reason they had a second crisis is because the ECB didn't act like a normal central bank. The ECB is doing that now, like the Fed, like the Bank of England. The problem is redenomination risk came out of the bottle and they can't put it back in. The only thing you can do now is erode the redenomination risk. The ECB did that job under Draghi. They've committed to that outlook. We need to see it from the fiscal side, Tom. That's why this news conference, compared to the weekend's events, it is night and day. It is all about the European leaders and their discussions going into the weekend.
There's no question about it. As we drive forward this conversation, folks, it is good to do it with someone with real money at risk who is steeped in the fixed income and yield markets, the complexities of Europe, but also has a firm grasp of his Italy and its interdependencies with continental Europe. John, I just think Alberto Gallo is a perfect person to speak to right now.
Alberto, fantastic to catch up with you, sir. Alberto Gallo of Algebris Investments. Alberto, just to get our hands around the guidance, just to refine some words I used a little bit earlier today. QE will carry on. Shortly after QE ends, they may raise interest rates. Long after they've raised interest rates, they'll be reinvesting these maturing assets on the balance sheet. But QE is not going to end for a long, long time, is it, Alberto?
Good morning, John and Tom. We're looking at central banks getting stuck into quantitative easing, into asset purchases for a very, very long period of time. The idea of modern monetary theory or prolonged asset purchases from central banks is not a new idea. We had periods in history looking back, not 10 years ago, but much longer, when interest rates were low and governments were trying to use their currencies to fund large deficits. In history, we had many recurring episodes where governments essentially debased their currencies. And we're probably about to witness this type of turning point. There is something around $100 trillion in global fixed income, sovereign bonds and investment grade debt that are yielding very close to 1% or zero or below zero. Now, for the first time, we're seeing monetary stimulus unprecedented and fiscal stimulus combined. So a lot of these savings are essentially a sitting duck in the potential picture of a small rise, even a small rise in inflation. What central banks will do is to keep buying because they cannot afford government bond yields and financing costs to rise because there's too much debt.
Alberto, this is so important what you're saying, and folks, we've really got to focus on this right now, going back to the research of Paul DeGuare and Charles Weiplotz at the beginning of the financial crisis. Come on, Alberto, it is one big exercise in kicking the can down the road. What is the price to the system of Europe perpetuating that process?
This is why all investors are a bit uneasy. We have stock markets and a lot of financial instruments hitting record highs, but I have to say there's an eerie mood among market participants, and there's the feeling that someone will have to pay the price. So that's the question you're asking. What is the price? The price for an unprecedented monetary and fiscal stimulus, the price for QE infinity could be at some point to have a higher level of inflation. And here I'm going to go and quote Carmen Reinhardt, who said that the lesson of history is that even if institutions and policymakers improve, they're always tempted to stretch the limits. Some governments, maybe because of elections, maybe because they want to keep unemployment low, they may be tempted to stretch the limits, to push interest rates lower, to increase QE even more, to do yield curve control, to go into more negative territory. And even a small rise in inflation means that you're going to get negative returns on your savings. If you're invested in treasuries, if you're invested in gilts in the UK, or euro sovereign debt. So I'm not so worried about the euro breakup risk, but I am worried if I'm holding BTPs at 1% or if I'm holding treasuries at 1%, I'm worried about inflation going to 2 or 3.
Alberto, given the fact that central bankers have been pushing the limit, how much are you expecting the ECB to start buying high-yield debt the way that the Federal Reserve has, and in order to to sort of profit from that, buying high-yield credit in Europe ahead of that?
So this is a race to the bottom with every central bank and every government trying to essentially do more stimulus to safeguard the industrial infrastructure in each respective economy. So the U.S. And the U.K. have already moved pretty aggressively. The ECB has an internal conflict because some countries want to do more and some don't want to do more. What they can do in addition, as you said, is they could buy double B-rated bonds, fallen angels in the high-yield space, or they could increase the envelope of the TLTRO or enlarge the tiering, the difference between the rates, the negative rates that banks are receiving versus the deposit rate of the TLTRO, essentially giving more money to banks. I think these two are not a base case for today, but they are a put option. They are a possibility if things get worse in the second half.
Alberto, fantastic to catch up with you, sir. Always great to have you on a day like today. Alberto Gala there of Algebris Investments, going into an important news conference in about 36 minutes' time with ECB President Christine Lagarde. Tom will take that news conference on Bloomberg TV and radio. The focus for many people, the what next, and how much pressure President Lagarde chooses to put on the European leaders that meet going into the weekend?
I hope everybody heard there Mr. Gallo's earnestness, his directness about the moment, John. I think it's being lost in the pandemic, and particularly, John, in the professional posturing of politicians. That was a grim Alberto Gallo as he cited the new chief economist of the World Bank. And, you know, the serious moment here as we talk to the deputy managing director of the IMF, John, I think is being lost in the pandemic.
Well, Tom, I think Europe, and for many people looking at Europe, people have been more constructive, relatively speaking, with how they've responded to this pandemic on the healthcare side of things. They have more faith in a durable uptick, Europe's ability to engineer a reopening that is a whole lot safer than maybe what we've seen play out across the Sunbelt. But I would caution, Tom, on the fiscal side, they just haven't got it done together in the way that they need to. And that's why this weekend, is absolutely critical to move things forward and leave some of these issues behind. Tom, Europe has always got it done in a crisis, but the outcome has always been suboptimal. And I really hope coming out of this weekend, we manage to change that.
I want to note also we've had some good charts up here, John, as well as yield comes in on many of the different European papers. Of course, we look at the German 2-year with that big negative yield. This is towards a lower yield. Prices being bid now within, again, the caution that we saw from Mr. Gallo. John, futures negative 20, Dow futures negative 160.
A bit softer in the equity market going into the opening bow, Tom. 1 hour and about 35 minutes away. The euro unchanged going into that news conference. 114 handle still, though. Euro dollar 114.07. On the equity market, a conversation you don't want to miss. Next on this program, David Costin, Goldman Sachs' chief U.S. equity strategist. From New York with Tom and Lisa, I'm Jonathan Ferro. This is Bloomberg.
I've always wanted to learn.
So I often struggled at school. Once, when we had a maths test, I looked around the room and everyone was just doing it. And I couldn't. And I began to cry. But my teacher came over and said, it might look like one big problem, but it's just a handful of small ones. And you can deal with that. I hear her voice in my head for every problem I face to this day.
Teaching. Every lesson shapes a life. You could get £26,000 tax-free to train as a teacher. Subject to eligibility, selected subjects only. Search Get Into Teaching.
Who says only the experts get to do the talking? On the Scuttle Puck NHL Hockey Podcast, irreverent outsiders Mike Bond and Dale Horde give their untrained opinions on all things hockey from the fans' perspective.
I don't know how you get those guys out of there. And Crosby, as great as he's been, it's just such a different era, so it's tough with the... He didn't have the crazy number of points that Orr, Lemieux, and Gretzky did. They just...
Search Scuttle Puck on TuneIn to listen.
Only one show bridges the gap between college football and the pros. Hosted by Bleacher Report's Matt Miller, Stick to Football is the podcast that connects the highest levels of the NCAA with the hottest action in the NFL. Featuring scouting reports, mock drafts, and the latest news and analysis from both leagues.
Today we are grading the NFC West drafts. Basically, I get to cry about my favorite team.
Search Stick to Football on TuneIn to listen.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then, whenever you want to browse your favorites, you'll find everything under the Favorites tab.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Want to get all your college sports news in one place? Turn on the Yahoo Sports College Podcast to hear experts Dan Wetzel, Pat Forty, and Pete Thamel break down the latest NCAA stories from the football field to the basketball court and beyond.
I think Reggie should do a video of him running to Heritage Hall and front flipping in. Remember that famous front flip in the end zone that he did? Wasn't he the one who made that popular?
I think he
was.
I think he was, yeah. Search Yahoo College Sports Podcast on TuneIn to listen.
Roughly a fifth of renters may lose their homes by September when pandemic-related eviction freezes are set to expire.
Renters in Indiana have until the end of the month before landlords can once again start eviction.
It isn't just the pandemic that brought us to this point. Check out this week's On the Media from WNYC. Listen to the On the Media podcast on TuneIn today.
To help keep you and your loved ones safe, TuneIn has the latest guidelines from the CDC. Home alone or with housemates, stay home as much as possible. Try to allow only people you live with into your home. Wash your hands. If you're sick, stay home and isolate from housemates. For the latest stories and updates on COVID-19, search Coronavirus News on TuneIn.
This news anywhere. We've actually given the matter quite a bit of thought.
Let's get now to our guest joining us from Bangkok. She joins us on the phone from the Hudson Valley.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
What does that moral leadership look like to you?
Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio.
The stock market is missing this point. This is not a balance sheet recession.
We actually like the fact that the yield curve is actually widened a little bit, and more specifically has steepened a little bit. That's something that's a healthy thing for the economy.
The market right now seems to be saying that Jerome Powell is far more impressive and important than Donald Trump.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance on Bloomberg Television, Bloomberg Radio across this nation and worldwide. Thrilled you're with us. Those of you working at home, thank you for joining us for your morning brief, and particularly the many coming back to the office as we are here at 731 Lexington with our great team, Jonathan Farrell, Lisa Abramowitz, and Tom Keene. Thank you for being with us this morning. The news flow, John, this morning, just in this hour is extraordinary. We're going to take time here with David Kostin on the equity markets, but just as importantly, Lagarde at the bottom of the hour.
We've got to catch our breath, Tom. In about 29 minutes' time, we'll hear from ECB President Christine Lagarde. Before we get there, though, jobless claims and retail sales in America. The struggle continues, Tom, to get a clean read on the U.S. economy.
Lisa, it's two worlds. I want to get to David Kostin here quickly, but Lisa, it is two worlds. You've been so good about this, it's about finance and Morgan Stanley, ball deep to left field over the turnpike, over the cask and flag, and great. What it's really about, Lisa, is we really lose perspective on the tangible hardship that's out there.
Yeah, and we're going to get a sense of that with the churn. John's been talking about this, the churn in the unemployment numbers. Yes, we're expecting a decline in the total filings, and yet are we seeing a significant number of increases in harder hit areas by the virus, Tom?
I'm looking at the data right now. I'm going to forego a fancy data check. John will do that at some point. What you need to know, futures in negative 22, Dow futures negative 171, the VIX center tendency 28.82. Yesterday we spoke with Michael Holland with decades of experience at the acquisition of shares and patience in the market. David Kostin is with Goldman Sachs, the legacy of Abby Joseph Cohen. And, of course, there it is warfare on outperforming indexes, outperforming sectors of what to own, and just as importantly, what not to own. We get a briefing from Mr. Kostin. David, what do I not want to own right now?
What you want to avoid are companies that have a shorter duration in their cash flow. What do I mean by that? That is to say that the average time in which their earnings and their cash are coming in are relatively short duration. In contrast, what you want to own are companies with the longest duration assets, and those would be particularly in the technology and the healthcare sector. The reason for this is that the low interest rate environment, which is a characteristic that we expect to persist for a number of years into the future, that low interest rate environment increases the value of those longer duration assets. And so right now, the market is paying for, is trading, is valuing, embracing companies that have this longer duration attribute of their cash flows, number one. Number two, if you have shorter term growth, that's also good. And the third issue is the balance sheet strength. So those three things, long term, short-term and balance sheet, they explain 50% of the variation of stock prices in the market. That is, those are the three attributes, and they're paying for a greater premium for that longer duration asset. So that's what you want to own. What you want to avoid are companies with the short duration.
David, if you want to break some news here off the good work of Heath Terry, you can tell us about maybe a raised price target at Goldman Sachs on Amazon. But what I would note is massive extrapolation out there right now. Are we at risk of extrapolating this rally, causing us great danger later?
Well, you ask an interesting question, because what has surprised me is the number of portfolio managers who are calling us and asking about 2022 estimates. You heard me correctly, 2022. That's different, right? About a few months ago, everyone had the view, which certainly we embraced it and advocated, you should avoid or look through the trough in 2020 and really focus on the level of profitability for next year, 2021. Well, the markets rallied back a lot, and clients are asking and focusing on 2022. So what kind of level of earnings do we expect the next couple of years? We've got $170 of earnings for next year, $170 in 2021, rising about 11% to $188 in 2022. So that's the trajectory. It's certainly getting somewhat better in our model and some of the assumptions. But the idea, Tom, of your question about extrapolating forward, certainly people have been looking further into the future to rationalize share prices at the current high level on an absolute basis.
Well, David, let's extrapolate out even further. You've come out with a 10-year outlook, some basic assumptions on a range of returns you're expecting. What's different between this outlook and the one you put back out in 2012, all those years ago?
Okay, well, thanks. We did focus on this because it's the middle of the year, right? It's July, and a number of pension funds start to focus on their asset allocation. They basically, June 30 is often their end of their calendar marking in terms of performance. And so if I look out over the next 10 years, what I'm looking for in forecasting is 6% annualized nominal total return. So what does that mean? That's 6%, including dividends, which are roughly now around 2%. That's the compound annualized total return over the next decade. I'll put some confidence intervals around that at 2% on the low end, so positive 2%, and around 11% per year on the high end, so 6% the midpoint. Now, what was my report card? So 8 years ago, in July of 2012, we published the last time we really went out and looked at a 10-year forecast, and we anticipated around 8% return with a high of around 12%, and the actual reality, realized returns was around 13.6%. The bottom line looking forward, you've got a slower growth environment. We have a much meaningfully higher starting valuation, which is certainly predictive of a return to a meaningful amount. And we do a lot of simulation in terms of the type of economic environment, dividend growth, et cetera, that we're likely to anticipate and experience over the next decade. So between now and 2030, we should be anticipating around 6% annualized return for the market.
David, will big tech continue to lead those gains?
I would expect yes. Right now, technology, as I said earlier, has this as a benefit of longer duration, a longer tail of their earnings and their cash flow and their business model. The market is embracing that. We've got a world of low interest rates, and that low interest rate environment is supportive of the longer duration assets. And so I think you've got a 90% likelihood that the equities will beat bonds in terms of return perspective over the next decade.
What about the cyclicals? Do you expect them to come into play here and start to gain with the big tech names, or do you think that they'll continue to be left behind and big tech will take on a bigger and bigger concentration of the total index?
So in order for cyclicals to begin to outperform, that is to say the financials and industrials and materials and things that are more economically sensitive, we need to have not just better economic data and a rising rate environment. That is the cocktail. That's the recipe. We need to see those companies do better. As the experience of a improving short-term economic activity looks higher and starts to inflect higher, the valuation of that near-term growth becomes more of a focus for portfolio managers. Absent that inflection upwards, the investor focus is appropriately on the longer-term growth, companies, and that's I think what benefits, frankly, in this environment, the technology companies in particular, some of the biotechnology areas as well. There's other components of inside of the market, but those are the stocks that we really focus a lot of attention on. And it's interesting, in our model, the technology sector is more closely trading around fair value than maybe many people anticipate. A lot of people think tech is highly valued. It's closer to the model. On the other extreme, you look at household products, consumer products companies, some of those trading much more rich valuations than our model would suggest.
Toothpaste companies with a 25 PE. David Costin, I want you to take the 60,000-foot view. I know you can do that from West Street. We've got money up to our eyeballs. The money costs nothing. The acquisition of debt costs nothing. Are we preparing for a great American roll-up where the only way to advance revenue is to go out and buy everything in sight strategically?
Well, it is certainly a attractive financing environment for companies to acquire, make acquisitions and have mergers. This is a good opportunity. I think it's a little difficult to conduct rigorous due diligence in a COVID world, so that is what was one issue. But yes, from a financial perspective, this is a good opportunity. What is interesting is companies with the strongest balance sheets are trading at material premiums, significant premiums. The market is, in fact, saying that it's actually not that confident about the sustainability and the rapid recovery. It's kind of a V-shaped recovery. The equity market is saying it's willing to pay a big premium for solvency and liquidity and companies' strong balance sheets. So the idea of whether companies choose to use that fortress balance sheets, those companies in that position to make acquisitions, this is certainly a good opportunity from a financing perspective where rates are likely to be low for a while.
Hey, David, always great to catch up with you, sir. Thank you very much for your time this morning. My best to the team over at Goldman. David Costin there of Goldman Sachs on this equity market. And isn't that the truth, Tom Keene? After this pandemic, the strong get stronger, the weak get a whole lot weaker.
This is so important, and a major shout-out, John Farrow, to Catherine Mann of Citigroup. We talked about this years ago, the monopsonistic, it's a fancy word, but the monopsonistic tendency, and the idea, as you say, John, of the strong getting stronger and acquisition happy here, as we saw with Mr. Buffett. I mean, I really wonder what we're going to see next year and the year following in terms of, I need revenue growth, where do I get it?
I've seen this play out in the credit market as well, haven't we, Lisa?
Yeah, well, certainly the big companies have been able to borrow at incredibly low rates. I am struggling with the cyber risk, though. On a day like today, you've got these big tech companies facing some big tech risks with the likes of Twitter. Amazon's still in a very good position, but you do have to wonder about some of the other risks that we might not be thinking about.
Can you imagine you hack into the accounts of prominent people like that and you make it about Bitcoin? And you do it outside of market hours.
You're saying that it wasn't a good cause?
I'm not suggesting there was a better use. I'm just suggesting that the amount of chaos that they could have caused but didn't. And Tom, I think that's the worrying thing about this whole episode, that they could have done so much more damage with that hack overnight than they actually did.
Well, as Alex Webb mentioned, with his great report from London, it was small money that they acquired. John, what I don't understand out of this whole thing is what are the governments waiting for on Bitcoin? I'm happy with all the happy talk. The singular issue here is they use Bitcoin.
Well, Tom, I'm going to allow you to be the one that receives the Bitcoin hate mail, and I'm going to steer clear. In this market right now, equity futures down 0.7% on the S&P 500. Your euro absolutely unchanged at 114.12, going nowhere on the session. It bounced off the low. 18 minutes away from a news conference. Stay awake for it. President Lagarde just around the corner. Coming up, Julia Coronado of Macro Policy Perspectives, president and founder from New York. This is Bloomberg.
Now with the latest news from New York City and around the world, here's Michael Barr.
Tom, John, Lisa, thank you very much. Georgia Governor Brian Kemp has voided local mask mandates as other states order face coverings to fight the pandemic. More than 137,000 people in the U.S. have died from the coronavirus. California reported its second highest single-day increase in new coronavirus cases and deaths. San Francisco Mayor London Breed says they could restore some restrictions in the city if cases continue to surge there.
In a situation where there could be a significant surge, we are looking at the possibility of rolling back some of the things that we allow the public to do. So it's really up to everyone who's out there to wear a mask, to follow social distancing, to be a part of the solution.
One of the nation's leading infectious disease experts is weighing in on criticism from several Trump administration officials. President Trump insists he's loyal to Dr. Anthony Fauci. However, various White House staff members have taken shots at the nation's leading infectious disease authority. White House trade advisor Peter Navarro published a short article in USA Today saying Anthony Fauci has been wrong about everything that I have interacted with him on. Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr, and this is Bloomberg.
President of the Jewish Communal Fund, Zoya Raines, and her husband Robert Friedman, Jewish activists and philanthropists, talk about why they chose the Jewish Communal Fund for their charitable giving.
As very busy working parents, we wanted to focus more on the charity part of it and wanted to focus more on our children and less on the administration.
The Jewish Communal Fund is one of the oldest and largest donor-advised funds, but at the same time, they're totally up-to-date and have state-of-the-art systems for us to access and manage our contributions online. The assets in our fund at the JCF grow tax-free, so we can generate more charitable dollars to support the charities that we care about most.
Let JCF minimize your taxes and maximize your charitable giving.
We're incredibly passionate about our charity, and the JCF allows us to focus more on the charity and less on the administration and the headaches.
For more information about Jewish Communal Fund, visit our website at jcfny.org and request a new fund kit.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Influential conversations from Bloomberg Television.
How do we control coronavirus now? Listen to Steph. She's a bus driver.
Now that people are using public transport again, we really need to make sure that we keep each other safe. Passengers need to stay 2 meters apart. If that's not possible, make it at least 1 meter. I want to see everyone wearing face coverings over their mouth and nose unless you've got a good reason not to. And when you get to where you're going, you need to wash your hands. We've still got to play our part.
Stay alert. Control the virus. Save lives.
Eurotunnel Le Shuttle is a safer way to get to France and beyond, with social distancing built in. There's no scrum at security, hanging around for your bags, or shouldering strangers in your seat. With Eurotunnel Le Shuttle, simply drive on at Folkestone and stay in your car, comfortably. Then drive off 35 minutes later. Stay safe. Go Tunnel, Eurotunnel Le Shuttle, a safer way to France and beyond.
Growth isn't going to come in a one-shot, assistance package from the European authorities. It's going to require a commitment to, long-standing things that we've all understood, right? Which is increasing productivity, improving competitiveness.
Jeffrey Okamoto there, IMF's first Deputy Managing Director on Europe. Europe from here, very much in focus. In 13 minutes' time, we'll hear from ECB President Christine Lagarde, and then it is all about fiscal authorities. European leaders meeting in Brussels going into the weekend. From New York this morning, good morning, alongside Tom Keene Keane and Lisa Abramowitz. I'm Jonathan Ferro. As we get you set up for the opening bell, 1 hour and 12 minutes away, with equity futures down around about 0.6% on the S&P, just below that 3,200, a line in the sand at 3,199. And your bond market yields come at a single basis point to 0.62%. Around the corner, 12 minutes away, we will get initial jobless claims data alongside US retail sales in America. In the FX market, going into the news conference with President Lagarde, Tom, euro dollar 114.14, unchanged on the day. How much pressure will Madame Lagarde put on European leaders going into the weekend?
It'll be interesting to see. I think our goal is to get through it. But the questioning is really of a great quality at the ECB press conference, so maybe there'll be some interesting tone there as well. Julia Coronado's with Macro Policy Perspectives. Her acclaim out of University of Texas, Austin, was the economy. She was at Barclays and BNP Paribas, where she absolutely nailed the slowness of GDP that was to come. With Macro Policy Perspectives, she joins us this morning. Dr. Coronado, let's go back to that moment where you nailed the GDP growth that didn't happen. Are we falling into that trap again?
We're certainly at danger of it. I mean, the Fed has done a pretty good job disconnecting markets from the economic distress we're experiencing, which prevents the sort of debt deleveraging that we were starting to see in March. And it was that balance sheet drag that really was the constraint on the recovery last time around. Now, we don't have over-leveraged consumers. That's definitely a benefit. We also don't have banks that are in distress or having solvency questions, and that's also a huge benefit. But we do have a deeper fundamental hole in the economy and just a tremendous amount of uncertainty. So there is still lots of need for support to get the economy through this and to minimize the structural damage and the frictions that can result if this just drags on and we don't get some clarity on the virus.
Dr. Coronado, tell us about the rates of change, the dynamics value of something like jobless claims right now. Is that statistic that we see here, and I believe it's 10 minutes, that statistic, is it of value to you?
Oh, tremendous value. I mean, the fact that jobless claims are still so historically elevated tells us that there's just incredible churn in the labor market. We have not settled down. We have not gotten back to normal. Yes, we've had a couple of surprisingly good job reports, but this is mostly about people reconnecting to their employers as some reopenings happen. But we see now that those reopenings were too early. It's very fragile, and the outlook for the economy could take a turn for the worse again, given that we're seeing increased restrictions in the states where the virus has really taken off. So Go ahead. Sorry.
Julia, yesterday American Air said that they might lay off or are likely going to lay off 25,000 employees when the fiscal support runs out. This raises a question. Was the fiscal support worth it? Did it just prolong the inevitable by keeping people on the payroll in theory, but not in actuality, to Tom's point of what is the meaning of furlough? What's your view on that?
Well, I think that the design was good. The idea was that this was a temporary stop that we needed to put on the economy as we put the structure in place to manage the virus, as we dampened the spread and then put the structures in place to manage it going forward. We have squandered that opportunity as a nation. Some states have done better than others, but the design and the intention was, I think, well thought out. The actuality is that...
All right, I'm placing a stop on profit for British pound at 125.570. So stop on profit for British pound at 125.570.
States that has led to this situation where we're now seeing more permanent, lasting separations and reductions in force.
This is so important, and as we wait for these claims data, the initial jobless claims that we're going to be getting soon, what are you looking for to indicate the scope, the depth of that second wave of layoffs that already has begun?
So, one, we look at the initial claims, both the regular and the pandemic program for gig economy workers, just how many new filings are there, and then we look at continuing claims, which gives us a better sense of on net how many people are leaving the roles of unemployment and returning to work, and that gives us a sense of what might be happening on the hiring side of the ledger. So we haven't seen as much. There's been a little bit of a disconnect between claims and payrolls. Payrolls show a bit more reconnection than claims show. There's a lot of noise in the data. There's, on both sides, both for payrolls and for claims. Triangulating the whole picture, though, we still do have a very elevated level of unemployment, and that return that we were starting to see a very nice dynamic is at risk. And claims it's timely. We get it every week. So that gives us a real-time read on how this resurgence in the virus is impacting the labor market.
Julia, brilliant to see you. Julia Coronado there of Macro Policy Perspectives ahead of some important data in America, around about 6 minutes away. Tom Keene, retail sales is for June. June feels like a lifetime ago.
Oh, you're so right. It is just so far away. June. I just want to mention, John, that Dr. Coronado, it's out there, and it's not in the zeitgeist, but she's considered, on a list of economic responsibilities or Fed responsibilities if we get a President Biden. I just think we need to mention
You just want to throw that out after she's left instead of just asking.
No, I don't want to embarrass her. I mean, it's not like, a current, clear, and present thing. It's not like an operational thing, but she's just talked about with her great abilities is someone that would serve within the Biden administration, maybe somewhat like what Jared Bernstein has done, is Mr. Biden's senior advisor.
How about next time you get her on, you ask the question? And we'll see what she says.
I'm not as rude as you are, John, but
I don't think it's rude to ask.
Lessons.
I'll give you some lessons in a commercial break. We can deal with that next. Lisa, looking ahead to the data that comes out in 5 minutes' time. It is June retail sales, and most economists will tell you, looking at the high-frequency data since then, things have stalled out.
There's a question: how much value do some of this these data have at this point, given their lagging nature? A lot of people looking forward. That said, John, I do think it's important to see how much momentum there was heading into this latest bout of virus uptick, and just get a sense of what the potential is to get back up and running if we do get a medical cure.
Do you think I'm rude in interviews?
No, I don't think you're rude in interview.
I think I'm polite.
I do think, though, that we could have asked that head on rather than insinuate afterwards.
I'm terribly diplomatic, polite, and subtle. And I'll be that way with James Gorman and Morgan Stanley alongside Sonali Bassett
nice of you.
in about an hour's time. Up next, we'll get you that data, and we'll hear from the ECB President, Christine Lagarde.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
The following is a message from PGIM.
Welcome to Outsea in 60, Perspectives from PGIM Thought Leaders. Here's Mark Baribeau, the head of global equity at Jennison Associates.
You're looking at bigger implications of technology playing a role in keeping us all connected, giving us access to information or goods very quickly. So we don't see any of those trends changing. In fact, they're likely to accelerate. There's some new things that have come along, though, that people might find useful, like telemedicine. There were skeptics about that, and I think the more people using it, especially the more doctors are using it today, the more they're liking it. You can see more patients. It can be more effective. It might actually be a better solution.
Hear more PGIM perspectives at pgim.com. That's PGIM.com. Partner with PGIM, the investment management business of Prudential. These statements are not intended to be investment advice and should not be used as the basis for any investment decision.
Should your kids go back to school? Ask Andrea. She's a teacher.
We're doing everything we can to keep the children safe and happy at school, which is why it's great that more of those who can are coming back, not only for their education, but for their overall well-being too. It gives them a routine, helps develop their social skills, and they get to see their friends too.
If your child is eligible, they should return to school. The government is working towards getting all pupils back in September. Stay alert. Control the virus. Save lives.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Eurotunnel Le Shuttle is a safer way to get to France and beyond, with social distancing built in. There's no scrum at security, hanging around for your bags, or shouldering strangers in your seat. With Eurotunnel Le Shuttle, simply drive on at Folkestone and stay in your car comfortably. Then drive off 35 minutes later. Stay safe. Go Tunnel, Eurotunnel Le Shuttle, a safer way to France and beyond.
When you're facing a problem, like how to make an electric car more efficient, you could sit down and talk it through. But at Honda, we decided to listen to the wind tunnel. With wing mirrors? Or without?
Yes.
With?
No.
Without?
Yes.
With?
No.
Without?
Yes.
Or with cameras instead of wing mirrors?
Sweet.
The new Honda E with wind cameras, not mirrors, because we listen to the wind. Honda, the power of dreams.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Your economic data just around the corner in New York City. We'll get a sneak peek at that in just a moment. We can get you your retail sales first, your claims coming a little bit later. We can do that with Bloomberg's Michael McKee.
Well, John, let's run through it all quickly with Christine Lagarde coming up here. Retail sales on a over a month basis rise by 7.5% from the number in May, which was 17.7%. So it slows, but it's better than forecast. Ex-autos, we see a 7.3% rise. Still looking for the control group number to come out, which is, of course, the one we look at because it's kind of what goes into GDP. The other big number of the morning, initial jobless claims, 1,300, a little bit more than forecast by economists surveyed by Bloomberg. Let's see here. They revised last month's to 1,310. Continuing claims, 17,338,000. That is another decline of about 100,000 from the prior month. So we are seeing a continuing decline in continuing claims, but we are not seeing a decline in jobless claims. And of course, we saw a lot of companies start to reclose again. And one final number here, the Philadelphia Fed Business Outlook comes in at 24.1. That's a drop from the prior number of 27.5, but it is higher than the forecast of 20.
Mike, I'm going to call this a sturdy report. As Michael McKee waits for that important control group statistic, it's 5.6% versus a survey of 4%. Michael McKee, you spoke with Mr. Harker yesterday, and the money question here is this stability in the economy, not this great news, but this okay news. Does it change the stimulus debate in Congress, and does it change the many debates for Chairman Powell?
Well, if people understand economics at all, it shouldn't change the debate in Congress because it does show the jobless claims numbers show things getting a little bit worse over the past week. And, of course, it's been since the 1st of July that states have started closing down again. The Philadelphia Fed number, yesterday we had Pat Harker telling us that things had gotten a little worse as far as the coronavirus in the tri-state area of Pennsylvania, Delaware, and New Jersey, and that number kind of bears it out a little. So we're not through this at all. The data lot of it is stale. Certainly retail sales is telling us what happened in June. And John, you were talking about how that seems like a lifetime ago. But it does give us a picture of how fast people might come back if and when we get some kind of vaccine.
All right, Mike, help us with this data dump in terms of which is the highest frequency indicator. I'm struck by the initial jobless claims, just that basic headline number coming in worse than expected, indicating that there is that ongoing wave of layoffs in the wake of the increase in virus cases. Does that stand out to you as the number of the morning?
It does. It's the one that tells us what's happened most recently in the economy. And if you look at the overall release from the Department of Labor, the total number of people who are now getting benefits of one form or another for unemployment is 31,491,000. That's up from 30,574,000 the week prior. So more people getting benefits. The total of jobless claims that we get each week and continuing claims doesn't always include the pandemic emergency assistance for gig workers and the self-employed. So you put it all together and you still have a lot more people who are collecting benefits and really no significant improvement.
Hey, Mike, great work on the data in America, as always. Bloomberg's Michael McKee there here in New York City. Let's head over to Frankfurt, Germany now for a socially distant news conference with ECB President Christine Lagarde, who maintains ample stimulus is needed. Your euro firmer on this one, euro dollar 114.20. Here is Madame Lagarde.
That the coronavirus crisis phase is over. We will reinvest the principal payments from maturing securities purchased under the PEP until at least the end of 2022. In any case, the future roll-off of the PEP portfolio will be managed to avoid interference with the appropriate monetary policy stance. Net purchases under our asset purchase program will continue at a monthly pace of 20 billion, together with the purchases under the additional 120 billion euros temporary envelope until the end of the year. We continue to expect monthly net asset purchases under the asset purchase program to run for as long as necessary to reinforce the accommodative impact of our policy rates and to end shortly before we start raising the key ECB interest rates. We intend to continue reinvesting in full the principal payments from maturing securities purchased under the APP for an extended period of time, past the date when we start raising the key ECB interest rates, and in any case, for as long as necessary to maintain favorable liquidity conditions and an ample degree of monetary accommodation. We will also continue to provide ample liquidity through our refinancing operations. In particular, the latest operation in the third series of targeted long-term refinancing operations, known as TLTRO3, has registered a very high take-up of funds supporting bank lending to firms and to households. The monetary policy measures that we have taken since early March are providing crucial support to underpin the recovery of the euro area and to safeguard medium-term price stability. In particular, they support liquidity and funding conditions to the economy, help to sustain the flow of credit to households and firms, and contribute to maintaining favorable financing conditions for all sectors and jurisdictions. At the same time, in the current environment of elevated uncertainty and significant economic slack, the Governing Council remains fully committed to doing everything necessary within its mandate to support all citizens of the euro area through these extremely challenging times. This applies first and foremost to our role in ensuring that our monetary policy is transmitted to all parts of the economy and to all jurisdictions in the pursuit of our price stability mandate. The Governing Council, therefore, continues to stand ready to adjust all of its instruments as appropriate to ensure that inflation moves towards its aim in a sustained manner in line with its commitment to symmetry. Now let me now explain our assessment in greater detail, starting with the economic analysis. Incoming data and survey results suggest that economic activity improved significantly in May and June from its trough in April, alongside the ongoing containment of the virus and the associated easing of the lockdown measures.
Position closed on British pound at 125.57. We have a profit, £1,000.
In its early stages and remains uneven across sectors and jurisdictions. After decreasing by 3.6% quarter-on-quarter in the first quarter of 2020, Euro area real GDP is expected to have contracted even further overall in the second quarter, broadly in line with the June 2020 Eurosystem staff macroeconomic projections. Signs of a recovery in consumption have emerged, while there has also been a significant rebound in industrial output. At the same time, subdued labour market conditions and precautionary household saving are weighing on consumer spending. Weak business prospects and high uncertainty are dampening investment, while the weakness in the global economy is hampering foreign demand for euro area goods and services. Euro area activity is expected to rebound in the third quarter as the containment measures are eased further, supported by favourable financing conditions, an expansionary fiscal stance, and a resumption in global activity. Although uncertainty about the overall speed and scale of the rebound remains high. In general, the extent of the contraction and the recovery will depend crucially on the duration and effectiveness of the containment measures, the success of policies to mitigate the adverse impact on incomes and employment, and the extent to which supply capacity and domestic demand are permanently affected. Overall, the Governing Council assesses the balance of risks to the euro area growth outlook to remain on the downside. According to Eurostat's flash estimate, euro area annual HICP inflation increased to 0.3% in June from 0.1% in May, mainly reflecting less negative energy price inflation. On the basis of current and future prices for oil, and taking into account the temporary reduction in the German VAT rate, headline inflation is likely to decline again in the coming month before picking up in early 2021. Over the medium term, weaker demand will put downward pressure on inflation, which will be only partially offset by upward pressures related to supply constraints. Market-based indicators of longer-term inflation expectations have continued to increase from the historical lows reached in mid-March, but overall remain at subdued levels. While survey-based indicators of inflation expectations have declined since the start of the pandemic, longer-term expectations have been less affected than short and medium-term expectations. Turning to the monetary analysis, broad money M3 growth increased to 8.9% in May from 8.2% in April. Strong money growth reflects bank credit creation, which continues to be driven to a large extent by the acute liquidity needs in the economy. Moreover, high economic uncertainty is triggering a shift towards money holdings for precautionary reasons. In this environment, the narrow monetary aggregate M1, encompassing the most liquid forms of money, continues to be the main contributor to broad money growth. Developments in loans to the private sector continued to be shaped by the impact of the coronavirus on economic activity. The annual growth rate of loans to non-financial corporations rose further to 7.3% in May 2020 from 6.6% in April, reflecting firms' need to finance their ongoing expenditures and working capital in the context of still anemic revenues. At the same time, the annual growth rate of loans to households remained unchanged at +3% in May, after declining for 2 consecutive months amid ongoing constraints on consumption.
This is Christine Lagarde, and we say good morning to you worldwide across this nation. Good morning in Europe as we listen to Christine Lagarde with careful comments of the ECB. Tom Keene at 731 Lexington. Paul Sweeney somewhere west. I'm not sure. He's got three or four of his properties as they span out to Ohio. We say good morning to Paul Sweeney as well. We've got lots to talk about, particularly on the equity markets. Futures -25, Dow futures 211, and we'll monitor what we see from Christine Lagarde in the press conference as it moves forward. We've got the right guest right now to sum all this together. Marcus Ashworth joins us with Bloomberg in London. Marcus, I know Paul has market questions, but I need to ask you about the delicacies of Madame Lagarde saying first do no harm, because these weekend meetings in Europe are so important. Explain to our American audience why these meetings are so critical.
Well, it's the first time that the European Union, with the emphasis on the word union, are actually hopefully going to act like one, in the sense that they may get some fiscal togetherness and not rely solely on the European Central Bank to provide a monetary response. So it's what we've all wanted for all these years. We've seen it in the UK, we've seen it in the States clearly, that you get both the central bank and the government acting together. But we've not really had that in Europe. We've had some domestic individual actions from certain countries, particularly Germany, but we've not had a combined European response. So we're really hoping that happens Friday or Saturday. I suspect there's a decent chance they do come up with something. They played it down so much that I think they're hoping for a nice big surprise. The ECB, I thought, would do a bit today, but they're doing absolutely nothing. But they've done more than enough in the last few weeks and months that it really is right onto the politicians.
So, Marcus, again, like many central bankers saying, listen, we've done our part. Now it's time for governments to step in with stimulus. What, if there is going to be some stimulus coming out of the European Union, in what form do you think it most likely will be?
Well, it should be on every single type of form you could think possible. And, you know, we certainly had that from the ECB. We've had all sorts of different types of QE and liquidity injections and all sorts of weird and wonderful things. On the fiscal front, we've had a progressive action, as I said, from certain governments, particularly Germany, but also we've seen Italy and France and what have you. Everyone's done the bit, but the cavalry is a combined approach we're talking about to be hopefully decided this weekend, which comes in a package. And I don't think the size is in doubt. It's going to be 750 billion euros, so $800+ billion, of which will be 2/3 of which will be in grants. The first time actual real money, as opposed to make-believe or loans or guarantees or something. And 1/3 will be in loans. But at least 500 billion will be in real money. The question is who gets what, where, and how. It won't start coming till next year. It'll be spread out over a few years, and it'll be paid out over about 30 years. So it's they'll issue bonds against it.
Marcus Ashworth with us with his great perspective, important notes from Bloomberg Opinion, linking in markets and economics. The markets, I can't do this like Karen Moscow, but I'll try. Futures negative 26, Dow futures negative 220. The tape was weak early this morning, improved, and now we've rolled over a little bit with some real tension there. The VIX 1.27 points, 29.03, not out to the 32 level of banks seen a number of days ago. Other than that, a churn to the market. Where's gold? I haven't quoted gold since time began. 1807, down $7. Marcus, we talked to David Kostin today of Goldman Sachs, and he's got what I would call constructive optimism on the market. I believe he's got an up 6% feel to SPX. Okay, fine. But what Mr. Kostin really emphasized is you need to glean the companies that can do persistent cash flow. In your experience, do you glean that at the revenue line, or do you have to go down the income statement to find the glory of persistent cash flow?
Well, I think the lesson we've learned from this crisis and recently how the stock market has responded is it's what was evident in a trend, what was happening and expected to happen is happening much quicker. So, obviously we've seen that the tech stocks do much better. We're starting to see the banks do quite a bit better now as well. So again, it's, as you said, it's the cash flow. Where is the money going to go? And I think that certainly we will see some more stable, not just tech companies doing better in the next while. And I think banks are clearly one sector to keep a close eye on.
So, Marcus, give us a sense just here in the U.S., kind of the narrative as it relates to the virus and then the economic impact and then the impact on the companies in general is that, boy, we're starting to see a resurgence or just a spike in cases in key U.S. markets like California, Texas, Florida. And that's obviously calling into question kind of any kind of economic rebound we may see on the other side of this. Give us a sense of what's happening in Europe as it relates to the virus. Are investors feeling like they can see the other side of this, or is there still too much uncertainty?
The stock market is definitely telling us that things are a bit better. Europe's doing better than the States generally at the moment in stock market terms, and certainly Germany has been doing particularly well within Europe. As I mentioned, banks are doing better in certain senses, and a few other things which are starting to definitely get a pickup. As far as the virus is concerned, I mean, there's a few articles out today which are pointing out how much of a ghost town London is at risk of becoming. The UK populace doesn't want to see to come out of hiding. We've seen that less so in Central Europe, which had it hardest first. We're seeing a lot more people coming back, and a lot more happier wearing masks. The UK still isn't ready to sort of fully grasp the mask concept yet.
Okay.
But most of Europe seems to have got it.
And now it's Ask Marcus, brought to you by Bloomberg Surveillance. Marcus, let's rip up the script here. And I say this with immense respect for everyone I know in the United Kingdom. I saw a percentage use of mask chart, and I was thunderstruck. Marcus, what's the why of the United Kingdom not wearing masks?
We are libertarian, we are free people, and we do not believe in... yeah, exactly. It's just exactly why when I lived in Japan or in Hong Kong, people wore masks because they were being mannerly, they were being polite, keeping their own cold in themselves. It doesn't seem to compute to the British people yet, but a lot of people, particularly, certain, will not go out and shop until they see everyone wearing it. So we've got a reverse effect here. People aren't going out because other people aren't wearing masks, but people won't wear masks. So, that's why no one's going out.
And Dr. Ashworth, thank you so much for joining us today. Marcus Ashworth, writing for Bloomberg Opinion. Here's where we are, folks, with futures at negative 24. Lagarde speaking, fragmentation risk has been significantly reduced. They've made, quote, full use of PEPP flexibility. And she says there's paint drying in Frankfurt. We'll monitor this as we can. There's never paint drying with the emails and the notes that we get from Neil Dutta of Renaissance. He is fabulous at cutting to the chase. Neil Dutta, this morning you saw glimmers of optimism in Philadelphia Fed data. Why are you not optimistic, but why is there a tinge of optimism out there?
Well, I think we had two good pieces of information and one bad piece of information. The good piece of information is the fact that consumption growth continues, and things sort of somewhat insulated from the spread of the virus, like factories, construction, are doing okay. We saw that with the New York Empire. We saw it again with the Philly Fed. But Tom, it's really about trying to turn on that last 5 to 10% of the economy that appears to be, wreaking some havoc on economic conditions across the country. And, leisure and hospitality, hotels, motels, food service, those are big employment vectors. And unfortunately, it's also big virus vectors, and you're seeing that show up in a jobless claim. And look, I mean, forget the seasonally adjusted jobless claims, Tom. It's the non-seasonally adjusted jobless claims that you need to be paying attention to right now, because given how high claims are, the seasonal adjustment is completely irrelevant, and that looked worse. I'm concerned.
Neil, to cut to the chase, what unemployment rate number shifts Fed policy? I know it's not 10%, double digit, but do you have a single digit feel or guesstimate of where the Fed would finally begin to amend policy, as Mr. Kaplan talked about the other day?
I mean, I don't think the Fed is changing their accommodative monetary policy. They will continue to err on the side of accommodation for the foreseeable future. I don't even think the jobless rate matters really in terms of the reaction function, unlike the Evans rule, where they sort of tied that to the unemployment rate. I think they'll basically tie their next interest rate hike to some kind of an overshoot of their inflation target. So, basically, it's no longer about the expected inflation you might get from a tightening jobs market, but the realized inflation you would get after the job market's already tightened. So I don't even think the unemployment rate really factors to a great extent.
I'm going to keep it short, Neil. We've got some audio challenges today, but we greatly enjoy the spirit. And I can't say enough about his terse research notes on economic data. Mr. Dutta with Renaissance Macro there as well. I mean, Paul, it's a pullback. Yep. What, Tina? It's the Tina Turner market, right?
That's right.
I mean, what do you? I looked at Amazon today, and folks, I'm in triple leveraged all cash, so who cares? But is that a pullback for Amazon?
I don't. Are there pullbacks for Amazon?
I love Paul. Everybody's got to understand. I'm just doing this to aggravate Paul Sweeney because he's like, I don't look that short term.
Exactly right. It's interesting, Tom. I mean, some of those names are just extraordinary, and you look at those tech names that are just propelling this market. And I understand it because people are looking for growth and certain top line growth, and
I'm looking for an entry
that makes
point.
sense. Yeah, look at I think the entry point is wherever you put in a market order today. That's your entry point, Tom.
Yeah, the entry point was 2009 or thereabouts. And so I make a joke about it, folks. But if you talk to retirement experts, people like Roger Ferguson, of course, with his leadership at TIAA-CREF, you talk to people up at Boston College, as an example, where they're a great retirement combine. Paul, this is a grim idea of if you're not in the market and you can't participate when things boom, it's so hard to catch up. And there's a lot of that catching up going on. Now, Madame Lagarde seen latest data. She says the euro area is in, quote, a good place. We're in a quote and a good place, too. Paul Sweeney and I, we're all set up. Richard Truman has us set up deluxe for another hour of Bloomberg surveillance.
I've always wanted to learn another language.
So I often struggled at school. Once, when we had a maths test, I looked around the room and everyone was just doing it. And I couldn't. And I began to cry. But my teacher came over and said, it might look like one big problem, but it's just a handful of small ones. And you can deal with that. I hear her voice in my head for every problem I face to this day.
Teaching. Every lesson shapes a life. You could get £26,000 tax-free to train as a teacher. Subject to eligibility, selected subjects only. Search Get Into Teaching.
It's time to look forward to that first dip in the pool, to getting back to what really matters, and to someone else doing the cooking for a change. Look forward to the warm sea breeze against your skin, to carefree days and new adventures, and to smiling from the second you land. Welcome back to Looking Forward. Welcome back to TUI. Discover your smile at All Protected.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
This week on the New Yorker Radio Hour, we'll talk with the creator of HBO's I May Destroy You about how she turned an experience of assault into a comic drama.
I go round and round in circles, feeling comfort and then feeling like I'm in a state of shock at the fact that I'm sharing this story. And then I laugh about it because it's absurd.
Michaela Cole on the New Yorker Radio Hour from WNYC Studios. Listen to this episode on TuneIn today.
The NFL conversation is too big for one host to handle. On the Ringer NFL Show, join a rotating cast of NFL experts for the latest news, analysis, and opinions on the league, along with special appearances from players, coaches, and more.
We are talking about something very near and dear to his heart because he's the one who helps put out the PFF player rankings every year, which is who is the best player in football. That's what we want to talk about today.
Search the Ringer NFL Show on TuneIn to listen.
We're all guilty of spending too much time on social media. Why not add something genuinely useful to your feed with TuneIn? Follow @TuneIn on Facebook, Twitter, and Instagram to learn about some of the best stuff happening around the app. You might just discover your next audio obsession. To help keep you and your loved ones safe, TuneIn has the latest guidelines from the CDC. Indoor gatherings, wash your hands and don't touch your face. Stay at least 6 feet from people you don't live with. Wear a mask. Don't share food, toys, or other items, and avoid shared surfaces. Open windows for better ventilation. Try to avoid gathering indoors as much as possible. For the latest stories and updates on COVID-19, search Coronavirus News on TuneIn.
This financial and business news anywhere. We've actually given the matter quite a bit of thought.
Let's get now to our guest joining us from Bangkok. She joins us on the phone from the Hudson Valley.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
What does that moral leadership look like to you at
Bloomberg? The world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
A lot of us are still in a bit of a guessing game, trying to determine how severe the downturn will be. The only thing that can bring an end to the crisis is containing the disease.
Finance.
We are the one country where people depend on employment for health insurance in the middle of a health crisis.
Investment.
Real yield is a scarce asset these days. It's just unknowable, of course, where things are going.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene, thank you for being with us coast to coast. Good morning, Boston, 106.1 FM, 99.1 Washington, D.C. Good morning to you. Bloomberg 1130, the gorgeosity of New York, the construction site known as every restaurant on Madison Avenue. Paul, the spirit of America to say, okay, this is terrible. We're all losing money. Let's set up the tables out front and take the first 3 lanes of Madison Avenue. It's just great.
It is exactly, Tom. And I mean, these restaurateurs are, appropriately aggressive, I would say, kind of figuring out unique ways to try to, open up their businesses. And so hopefully they will do as well as they possibly can.
I'm going to go out and have breakfast and support one of our local establishments here afterwards. Mrs. Keene says I can't say where it is because we don't want the hordes to descend.
Of course,
but come on, Paul, you got to go out and support the economy. We're lucky. You and I are gainfully employed, even though Rich Truman's got one foot out the door. But, I mean, the fact of the matter is we're so lucky we've got to support these small businesses.
I think you're absolutely right, Tom, across the country. And, I think it's begs the question here, is there another round of fiscal stimulus needed to help some of these good folks here, the backbone of the U.S. economy? And I think people are starting to look towards Washington for that next round of fiscal stimulus. The Federal Reserve has done, a yeoman's work, I think, to this point. But now I think kind of looking towards, the federal government and think about some stimulus.
Now, it'll be interesting to say the least. Futures at -21, Dow futures at -166. A little bit of an angst here, somewhat coming off the angst of yesterday as well. Bloomberg Surveillance this morning, always brought to you by Cohn Resnick Advisory Assurance Tax. Are you applying for PPP loan forgiveness? Don't leave money on the table or fail an SBA review. Visit CohnReznick.com/loan forgiveness. James Gorman in conversation with John Farrell and Shonali Bassick in a bit. Right now, David Wilson on Morgan Stanley and the rest. David?
Indeed, and if you want to start with Morgan Stanley, we can point out their shares are actually higher in early trading by 0.5%. The bank's second quarter earnings and revenue far exceeded analysts' average estimates in the Bloomberg survey. Trading revenue rose 73%. It's all about bond, currency, and commodity trading, which almost tripled in the quarter. Bank of America wasn't so fortunate. The shares are down 3%. Second quarter earnings fell 52%, even though bond trading revenue and investment banking fees climbed more than 50% apiece. Now, Bank of America set aside $5.1 billion for loan losses. That provision was the biggest in a decade. Some of the other results out, we heard from Johnson & Johnson. Shares are just a touch higher, maybe 0.25%. And Abbott Labs up about 0.75%. Both those healthcare companies reporting second quarter results as well. Twitter's down 3.5%. The social media company is dealing with the worst security breach in its 14-year history. Hackers posted tweets about an apparent Bitcoin scam yesterday on the accounts of Barack Obama, Bill Gates, Elon Musk, and other prominent figures.
Yeah, we should mention there, David, as well. I don't mean to interrupt, but Mr. Bloomberg was also involved in that with his notoriety. Mr. Bloomberg is founder of Bloomberg LP and, of course, his radio and television platform as well. Sorry to interrupt, David. I just wanted to get that out there. Because
and while you're at it, you can point out that we supply Twitter with a 24-hour news feed.
Oh, my God. Topping Tom Keene, David Wilson.
There you go. It's all about TikTok, right? Tesla down 4.5%. A sell rating on the electric car maker was reaffirmed at Citigroup, according to Dow Jones. Now, the firm raised its 12-month share price estimate by 83% to $450. What? Trouble is, the new target is down 71% from yesterday's close. So Citigroup's still quite pessimistic.
What do you do with that
Tesla.
research call? I just don't know what you do with that research call.
Me neither.
Yeah.
In any case. Here's another one you can figure out what to do with. Cisco Systems. The stocks are down 2%. The networking equipment maker was cut to neutral from the equivalent by J.P. Morgan, which said it can't see when revenue will start rising again. Cisco's sales have fallen the past few quarters. On the other hand, J.P. Morgan raised its rating on Corning to the equivalent of buy from neutral. The maker of display screens and other glass products up 2%. Kiogen's higher by 2.5%. Thermo Fisher Scientific raised its takeover offer for the Dutch maker of genetic testing equipment by 10%. The revised offer is valued at more than $11 billion. Now, Thermo Fisher also cut an acceptance threshold for the deal to 2/3 of the shares outstanding from 3/4. Kraft Heinz and Mondelez International both up about 1%. They were raised to buy from hold at Deutsche Bank. You were saying?
No, I'm just listening. The packaged goods stocks, I can't believe the multiples they're trading at. It's just like, David, I've never seen it.
Well, there you go. Then there's Disney, down 2.5%. The media and entertainment company was lowered to the equivalent of hold by Cowen, which said the coronavirus pandemic will hurt business for longer than it had expected. And since we're talking travel, we should note Norwegian Cruise Line down 8.5%. They said second quarter revenue was insignificant and a full year loss is expected. And all this being disclosed as part of a $925 million sale of notes and shares. Carnival down 5%. Royal Caribbean down 4%. Right. And in airlines, Delta down 3%. American, Southwest, United also lower.
David Wilson, thank you so much. If you go to the website of Charles Schwab, they're excited about fractional shares. They've got a thing called Schwab Stock Slices, which they're rolling out. But that's not the real reason people go to the Schwab website. They go there to read Lizanne Saunders. She's been doing this for a few years. I think I've seen more once-in-a-lifetime crises in Lizanne, but she's seen a couple of them, and we're thrilled that their chief thinker of research and equity markets, Lizanne Saunders at Schwab, could join us right now. Lizanne, what we treasure from you is what people are actually doing, not saying. What does retail and what does institutional flows tell you now?
So even within retail, Tom, you have to segment it a bit. There's obviously been a tremendous amount of attention on certain platforms and newly minted day traders. And
your kids are doing that, right? Your kids are at home doing this.
No, not my kids. No. I wouldn't let them play around in the options market or buy bankruptcy stocks. But a lot of attention on that. But that's not what we're seeing inside our retail volumes. So what's interesting is the more trading-oriented folks have definitely picked up their activity. But those that have an advised approach have been a bit more steady Eddie, maybe rebalancing a bit more frequently, which has been one of our messages. One of the ways to stay in gear in a market that is so difficult to anticipate is to just maybe do more frequent rebalancing, trim into strength, add into weakness, kind of the classic stuff, but have it driven by short-term portfolio volatility and less about calendar-based rebalancing. So, some of the trends that we're seeing are that even through this volatility, those that take this advised approach have had a very sort of calm ride through this, which is nice to see.
So, Lizanne, we're just starting to get into this Q2 earnings season. We've had some of the big banks report better than expected results, but I would suggest that I guess when I listen to the commentary, it sounds pretty cautious to me. What are you trying to take away? What are you really looking for as you look across this second quarter earnings season?
I think what's more important in earnings season is less about the actual report for second quarter, other than maybe talking about the trajectory and whether or not this perceived bottom that hit in April was applicable across industries, but more on forward-looking commentary, second half of the year into 2021. We know analysts have been kind of flying blind because of the record percentage of companies that have simply withdrawn guidance, and those companies are not adding back guidance with any kind of precision, but I think we're all looking for some clarity heading into the second half of the year. We know that the bounces in much of the economic data off the bottoms was extraordinary in percentage terms, but in level terms, we have a long way to go to kind of claw our way out of the bottom. And given, reports today and claims that were a little bit flatter, I think the high-frequency data plus what companies say may give us a better sense of whether this perceived V-shaped recovery actually has legs. I think it's more likely to be rolling W's than a clean V.
Are you, Liz, at Charles Schwab in that camp that you are able to look to the other side of this, wherever the other side is, or is that just too far in the future here?
I don't know that it's necessarily too far in the future. It's just a question of how deep the chasm is, and in turn, whether what the Fed has done in terms of the financial system and what, of course, Congress has done is enough to bridge that gap. We know there are going to be second-order economic effects absent anything virus-related. I think the damage to the labor market is long-term, and the damage coming as a result of spiking bankruptcies and potential defaults is still ahead of us. Even if there are parts of the economy that are in recovery mode, I think it's just going to be fairly choppy. Even if you sort of trust, say, 2021 calendar year numbers for the S&P, which are around 163, you're still talking about nearly a 20 multiple. So it's hard to suggest that the market is cheap.
Lizanne, long ago and far away on individual stocks, if you got here, maybe you wrote them in the option, you could have your gain taken away from you, create a capital gain, etc. But there were individual stock strategies. How do you hedge ETF ownership at Schwab? If I'm up, I've got a gain, but I want to hedge. How do you do that in 2020?
Well, I'll tell you how a lot of people are doing it. Is they're doing it in other asset classes like precious metals, and you're seeing that in some of the flow volume. I think the hedge against volatility is I think you're still seeing in the option markets at the individual equity level, but I think you're seeing it things like precious metals from a broader macro perspective. I think sort of geopolitics and volatility and uncertainty. I think that's been the fundamental play underpinning precious metals.
Lizanne Saunders, too short a visit. Thank you so much. Greatly, greatly appreciated. She is with and always will be with Charles Schwab. Futures at -20 with our news in New York City. Here's Michael Barr.
Tom, Paul, thank you very much. The headlines of mid-July are recalling the dreadful news of April as the coronavirus spreads out of control in much of the country, straining the healthcare system again. Bloomberg's Martin DeCarroll reports.
In hospitals getting overwhelmed by COVID patients, doctors and nurses lack PPE, the same problem that plagued them during the spring. It's a national disgrace, says Deborah Berger, the president of the largest nurses union in the country.
It seems criminal that nurses and healthcare workers are having to make do with garbage bags.
Garbage bags instead of protective gowns. The situation deteriorating so rapidly that Dr. Anthony Fauci says some states may have to lock down.
We've got to almost reset this.
The virus outbreak has worsened in 41 states over the past 2 weeks. In Washington, Martin DeCaro, Bloomberg Radio.
The Republican Party will hold a scaled-back convention in Florida. The Washington Post reports, according to a letter sent to delegates, next month's convention will include a mix of outdoor and indoor venues. Today's letter from Republican National Committee Chairwoman Ronna McDaniel said admittance will be limited to only regular delegates for the first 3 days of the convention, or about 2,500 people. On the last day, when the president attends, delegates will get a guest, and alternate delegates can also attend, or up to 7,000 people. With less than 4 months until Election Day, President Trump made a major change to his re-election team. The president demoted longtime manager Brad Parscale and replaced him with Deputy Campaign Manager Bill Stepien. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom Paul.
Michael Barr, thanks so much. We do data check, and it's an important data check because yields have come in ever so slightly, but we're looking really at every tick right now. Futures at negative 19, Dow futures negative 164. The 2-year yield to 4 digits, 0.1490. 0.61 on the 10-year yield. That bears watching this morning. Paul Sweeney and Tom King, stay with us. This is Bloomberg.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
Influential conversations from
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Getting in the car on a cold winter's morning, you don't even want to touch the steering wheel. And by the time the car's heated up, you're already at your destination. At Honda, we listen to the chattering of teeth. And we made an app for the new Honda E. so you can control your car remotely, warming it up while you eat your toast and checking its charge while finishing your coffee. The new Honda E. Honda, the power of dreams.
Ever wondered how people's postcode lottery works? Easy. Your postcode is your ticket. And every weekday it gives you the chance to win £1,000 or £30,000 every weekend. And every month players in your postcode could win a share of £3 million. Join in at postcodelottery.co.uk/radio before midnight on the 23rd of July to play in the August draws. PPL manage lotteries on behalf of good causes. 16 plus. Conditions apply. Play responsibly.
At Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are falling along with European shares as investors parsed mixed economic data and watch earnings roll in. The dollar remaining higher after initial jobless claims posted their smallest weekly decline since March. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures down 20 points. Dow futures down 192. NASDAQ futures down 113. The DAX in Germany is down 1/3 of 1%. 10-year Treasury up 6/32, yield 0.60%. And the yield on the 2-year 0.14%. NYMEX crude oil is down 1.1% or 47 cents at $40.73 a barrel. COMEX gold down 0.4% or $7.80 at $18.06 an ounce. The euro 1.1405 against the dollar. The yen 107.18. U.S. laboratory equipment maker Thermo Fisher Scientific raising its takeover offer for QIAGEN, a Dutch maker of tests for diseases including cancer and the new coronavirus. Bank of America down more than 3% after profits slid, while Morgan Stanley is up 1.5% in early trading after revenue and earnings jumped to an all-time high. That's a Bloomberg Business Flash. Tom and Paul.
Karen, thanks so much. I do want to note curve flattening. That's important, not through critical support, but 45.76. The difference in yield between the 10-year and the 2-year comes ever more narrower, and that's an important distinction for global Wall Street. We've been following the pandemic, the many different ebbs and flows of it. He is the health security senior scholar at the Johns Hopkins University. Here is Amesh Adelia.
There's two responses to the immune system that are important with the vaccine, the antibody response and the T-cell response. And sometimes the T-cell response is taken as a signal for longer-lived immunity, more robust immunity that's not reflected by antibody levels. So it's important to remember that since everybody focuses on antibodies so much, that there's this whole other arm of the immune system called T-cell immunity, and it's important for vaccines to do both. And that's one thing that we're hearing that the AstraZeneca vaccine is counting on is robust T-cell immunity to prove their efficacy.
The Moderna data, Moderna published a lot of data. It was just that it does seem as if the T-cell bit is a little light in terms of the information that was being provided. So we're waiting to hear on that. Nevertheless, are we starting to get an understanding of how the different how the different vaccines are going to be able to treat the virus? And in terms of understanding how we are going to prepare the population for generating kind of long-term immunity that's going to allow us to get back? Are we going to be in a position where we're going to need to pick and choose the right vaccines for the right parts of the population?
I mean, that would actually be something that would be good, that we have more than one vaccine that actually makes it through phase 3 clinical trials and can be used so that we have a menu to choose from. And I think that would be ideal because we know that people respond to vaccines differently based on their age, based on other risk factors they may have for severe disease. So it may not be a one-size-fits-all shot. We may be able to do some precision medicine. For example, with influenza, we recommend certain vaccines to the elderly, certain vaccines to children, and other vaccines for the rest of the population. That would be ideal. We want to just get one vaccine, though, that gets through clinical trials and can be put into people's arms. And after that, I think everything else is kind of going to be a bonus.
What are you making? Let's turn to the wider picture. What are you making of the situation in America at the moment? 37 states are currently reporting climbing case counts. In terms of what is happening here, there does seem to be, though, a growing awareness of the need to wear masks. And I noted with interest yesterday Walmart's decision to make it mandatory in their stores. Are we reaching a tipping point where actually the population is beginning to understand the necessary behaviors in order to limit the virus spread?
I do think that many people realize that face coverings are what we need to do in order to keep businesses, restaurants, and the economy open without disruption, because this gives people some assurance that when they go out of their house that they're not going to be exposed to the virus, and it keeps outbreaks from occurring in certain areas where, for example, in a store, then the store has to shut down, and so many stores may not even want to open because they're so worried about getting cases. So this is increasingly seen as how we move forward, and I do think it's not just face masks, it's also face shields also coming to the fore as well. So I do think that this is what we'll see as the new normal for a period of time until we have a vaccine at least.
Are we also beginning to understand what it takes to allow people to interact inside? This is sitting here in London, and if you're in the Northeast in the United States, at the moment, and Tom was talking about this earlier in the show, you have the ability to eat and drink al fresco. You have the ability to socialize al fresco, to be outside. That is not going to be there forever, and as the fall comes, things are going to get to be a little bit more difficult. What are your expectations for us being able to kind of do this in the autumn, in the fall? And do you think that we are heading, if we can't manage that, for a significant rise of both influenza and also COVID-19 in the fall?
It is going to take some adjustment to understand how we can do things safely indoors. Outdoors is much, much easier to social distance, and we're seeing less transmission. But indoors, especially restaurants and bars, we're seeing in many case contact investigations being drivers of infection. So we have to come up with a way to either to decrease capacity, change the physical layout, maybe not have people congregating around a bar. We know in Japan, for example, people are wearing face shields at the bar and drinking from a straw. We have to have all of these options on the table if we're going to make these things viable and safe. And I do think in the fall we are going to be contending with influenza at the same time as the coronavirus. That's inevitable. Influenza is still a major infectious disease threat, and it will be really important that we get people vaccinated against influenza so we can keep them out of the hospital so they're not competing for the same bed space that coronavirus victims will also need.
From Johns Hopkins University, a good update there today on this pandemic. And, you know, I'm trying to be optimistic out on Twitter about some of the trends. Arizona's a little better today than the last couple of days, but Paul, I'll tell you, it's brutal.
It really is.
I don't mean to segue here, but we got to get ready for Mr. Gorman, Paul. I'm sorry.
Yeah, absolutely.
One client at a time.
That's right.
Remember these phrases from the past?
Yeah. You know, Morgan Stanley, obviously great numbers today on the back of kind of what we saw from Goldman Sachs and JP Morgan. So the trading desk, Tom, you know, kind of...
I was stunned, lights out.
Yeah, the numbers are just extraordinary. And you think about it, it makes sense. When you think about all the new issuance that we've seen as companies try to shore up their balance sheet, and we've even seen some M&A activity probably above maybe what we would have thought given all the uncertainty out there.
Yeah, so. I mean, Paul, and you're better at this than I am. I don't remember James Gorman's first day, but I do remember saying, who is this guy?
Yeah, he's not John Mack. He's not, a trader, and that's kind of what you would expect from Morgan Stanley. But I tell you, his strategy of kind of focusing on the private wealth side of the business, I think has been generally lauded by the street and investors. But again, it just shows you here that when you get some volatility in the markets, these big investment banks can still put up some huge numbers off their trading desk. And it's not revenue that the street values as highly as some of the more predictable revenue, but boy, in some quarters you really need it, and this is one of those quarters for those big banks.
I just wonder about shareholder return, and I don't mean to cast aspersions on Morgan Stanley, but you don't compare him to Apple. I get that, but last 10 years, 7.8%. Does that get it done?
No, it's tough coming out of the financial crisis, Tom, with all those regulations.
Yeah, they would say, particularly with the Japanese challenges and ownership that they had, they're lucky to even do that. We'll see. It'll be an important conversation. I'll let Paul tell you about it. But Mr. Gorman on Bloomberg, stay with us.
The following is a message from PGIM.
Welcome to Outsea in 60, Perspectives from PGIM Thought Leaders. Here's Mark Baribeau, the head of global equity at Jennison Associates.
You're looking at bigger implications of technology playing a role in keeping us all connected, giving us access to information or goods very quickly. So we don't see any of those trends changing. In fact, they're likely to accelerate. There's some new things that have come along, though, that people might find useful, like telemedicine. There were skeptics about that, and I think the more people using it, especially the more doctors are using it today, the more they're liking it. You can see more patients. It can be more effective. It might actually be a better solution.
Hear more PGIM perspectives at pgim.com. That's pgim.com. Partner with PGIM, the investment management business of Prudential. These statements are not intended to be investment advice and should not be used as the basis for any investment decision.
For the Jewish Communal Fund, Noel Spiegel, former senior partner with Deloitte & Touche and past JCF president, discusses the advantages of a donor-advised fund over a private foundation.
There's a lot involved in having a private foundation. You need to engage attorneys, you need to engage accountants, file tax returns. At JCF, all of that is done for you. You don't have to get involved in anything other than making your contribution to your fund and then determining which grants that you want to make.
A JCF fund may be opened with a minimum $5,000 contribution of cash or appreciated securities and can be used as an alternative to or together with a private foundation.
If you have a foundation, you have to list all of the contributions that you made. Potentially anybody, because the information is public, can find out exactly which organizations a foundation has made charitable contributions to.
Let JCF simplify your philanthropy and protect your privacy. Learn more about JCF's private client group at jcfny.com.
How do we control coronavirus now? Here's Michael, a delivery driver.
All day, every day, I'm seeing people. Last thing I want to do is give anyone coronavirus. So the first sign of a cough, soon as my temperature rises, any loss of taste or smell, I'm staying in, booking a test, only going out to get it done. I mean, you want to know straight away, right? That's how we protect each other.
To get a test, go to nhs.uk/coronavirus or call 119. Stay alert. Control the virus. Save lives.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Thursday afternoon by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Thanks to National Lottery players, the Emerald Centre are now providing emergency food supplies and support for people in Bedfordshire like Alan. Thank you. And £600 million of National Lottery funding is on its way to thousands more local projects in England and across the UK during these exceptional times.
Thank you.
Thank you. Thank you.
Thank you.
Thank you. The National Lottery. Your numbers make amazing happen.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
Good morning. I'm Karen Moscow, along with Tom Keene and Paul Sweeney, and the opening bell brought to you by SEI. Today's competitive marketplace requires asset managers to become more operationally adept. See how you can transform your business with SEI's global platform at SEIC.com/IMS. Stocks are lower at the open. The S&P 500 is down 0.6% or 19 points at 3207. Dow Jones Industrial Average down 0.6% or 155 points at 26,712. And the Nasdaq's down 0.9% or 95 points at 10,455. 10-year Treasury up 630 seconds, yield 0.61%, and the yield on the 2-year 0.14%. NYMEX crude oil is down 1.1% or 45 cents at $40.73 a barrel. COMEX gold down 0.33% or $5.90 at 18.08 an ounce. The euro 1.1413 against the dollar. The yen at 107.15. Tom and Paul.
Karen, thanks so much. Bloomberg Surveillance brought to you by National Realty, NRIA, developers of high-return income-producing properties for investor partners. See them at NRA.net. Little red on the screen, negative 170 on the Dow. The VIX 28.58. I'm going to call it a churn off